Good afternoon to all. My name is Irini Vlachaki, and I'm part of the European Commission team that is based in Athens. I'm very pleased to welcome you all to this two-day online conference on Greece and the EU Economic Recovery and Resilience Facility. This conference is organized by the European Commission in close collaboration with the Foundation for Economic and Industrial Research, IOBE. As some of you may recall, two similar conferences have taken place so far. A virtual one last year and a physical one at the Acropolis Museum in 2019, when coronavirus was, of course, an unknown word for most of us. I would like to give you some short practical information, if I may, about the conference. At the conference website, through which you have connected to the event, you may find short bios of all of our speakers, as well as a number of relevant policy fact sheets and links. Just a quick look on the conference agenda, which I'm sure that many of you have seen already. Today, there will be 4 panel sessions that will focus upon the EU Economic Governance Framework, the Recovery and Resilience Plan of Greece and its contribution to the digital transformation of the Greek economy and public administration, and finally, the very critical implementation aspects of the Greek plan. Tomorrow, discussions will continue in 5 sessions, focusing on the prospects for Greece going ahead and Greece's transition towards a greener, more inclusive, and more sustainable economy. Please note that this conference will be recorded and the full videos will be available for public viewing after the event, also on the conference website. May I now ask for the relevant slide to be shown, please? Thank you. We would like to invite everyone watching to pass on any questions throughout the conference by sending an email to ec_conference@iobe.gr. Although we have a very tight schedule, we hope that the moderators will still have the time to pass at least some of the questions to the speakers. Finally, please note that the language of this conference is English. Unfortunately, there is no interpretation available into Greek. And now, I have the pleasure to introduce the head of the representation of the European Commission in Greece, Mrs. Niovirikou, who will be delivering the opening remarks of the conference. Thank you very much.
Good afternoon, dear ladies and gentlemen. It is a great pleasure and honor to welcome you to this year's very pertinent conference on Greece and the Recovery and Resilience Facility. There is no doubt that this conference comes at a very critical moment as Europe is starting to recover from a deep economic crisis and discussions are starting on the future of its economic governance. At the same time, many of the new tools developed during the crisis to facilitate recovery are now being rolled out. The Next Generation EU is the largest stimulus package ever financed in the EU in complement to a reinforced long-term budget for the period 2021-2027. And Greece, along with other member states, is now moving ahead with the implementation of its ambitious Recovery and Resilience Plan, Greece 2.0, which will spur a growth that will be led by the Greek people and which will be owned by the Greek people. As President von der Leyen has stressed, Greece 2.0 will deeply transform Greece's economy, which will embrace both the green and digital transition. The reforms and investments it foresees will make Greece emerge stronger, more resilient, and better prepared for the future. The key now, of course, is the implementation of this ambitious growth master plan. The European Commission will stand by the Greek people in their effort to transform the country. It is indeed a challenging task, but Greece will rise to the occasion and will seize the unique opportunities presented by Next Generation EU. This conference provides a great opportunity to continue the dialogue and exchange on good practices with all key stakeholders involved. I would like to thank the distinguished speakers that will be joining us, as well as the many people in Greece and abroad that will follow the conference. I do hope that next year we will be able to host you physically in Athens, and I wish you a fruitful online conference for the time being. Thank you very much for your attention.
Thank you very much, Niobe, for these warm opening remarks. And now with that, we have the pleasure to proceed to the first session of our conference, which will be focusing on the EU economic governance for recovery and resilience, with Commissioner for the Economy, Mr. Paolo Gentiloni, the Greek Minister of Finance, Mr. Christos Staikouras, and as a moderator, Nikos Vetas, Director of IOBE and Professor at the Athens University of Economics and Business. Thank you again. Enjoy the conference.
So, good afternoon. I'm Nikos Vetas, General Director of the Foundation for Economic and Industrial Research, IOBE, and we are collaborating with the European Commission for this important, we believe, workshop on how the Greek economy is doing, the view from Greece, and of course the view from Brussels, and more broadly. Without any delay, let us start this very first and important session, where we are honored and happy to have with us Commissioner Gentiloni and Minister Staikouras, who are going to talk to us about how the Greek economy is doing within the European context. Actually, I believe last time we had this very similar interaction was July of 2020. Again, an online conference. Let us hope that the next one, we can have it actually in Athens, so that Commissioner, you can join us here. It has been a strange time. But giving the floor to Commissioner, would you like to tell us how things look and what are your thoughts about current policy and also future policies?
Well, yes. Thank you, Nikos Vetas, and Kalispera. Pleasure to join you for this conference. And indeed, when I addressed this conference in July last year, the picture around Europe and the world looked very different. Let me begin by recalling the progress we made over the past year before turning to the economic outlook of Greece and Europe and the key challenges awaiting us. In July last year, Europe was still very much in the grip of the pandemic. Vaccine development, let alone rollout, was a distant hope. GDP was down by double digits, and the Commission proposal for the so-called Next Generation EU still under discussion. Fast forward to today, and where do we stand? In the space of only 1 year, scientists have developed multiple vaccines, and the global vaccination effort has already brought more than 6 billion jabs in people's arms, and Europe has one of the highest rates of vaccination in the world. If we take a moment to think about it, this is also a revanche against too many unjustified criticism of the EU response. And Next Generation EU is now a reality. The Recovery and Resilience Facility is up and running. 2/3 of member states' recovery plans were approved, and around 50 billion euros have already been disbursed. We are issuing common European debt to achieve our common European goals. This might not be as miraculous as a life-saving vaccine, but it is certainly historic. Our united response inspired confidence also in the markets, and the extraordinary support of fiscal and monetary policy working hand in hand is one of the key factors behind Europe's recovery. So the recovery is accelerating, exceeding earlier estimates. In the second quarter, we recorded a 2.2% year-on-year growth, outpacing both US and China. Economic sentiment in the third quarter remained quite high. And for this year as a whole, this should translate into growth well above 5%. The OECD latest forecast, as you know, projects a 5.3% growth in the euro area. And I will present the Commission's autumn economic forecast in early November. The figures for Greece are similarly encouraging. Real GDP has nearly caught up with its pre-crisis level. This is also translating to a drop in unemployment, which is very welcome news in view of its still high levels. At the same time, we should be under no illusions. It is too early to claim victory. We are not out of the woods and uncertainty remains very high. We don't want to repeat the mistakes of financial crisis when the premature withdrawal of supportive measures created the basis for a second recession. There are several risks to this positive outlook. The impact of Delta variant on global growth, the supply bottlenecks, the rising energy prices, inflation. We know the mainstream idea that inflation is temporary, but of course we should monitor it very closely. And while we may have seen less divergence than initially feared, the depth of the downturn and the speed of the recovery remain uneven across member states. So relaunching a path to a greater convergence across all regions of Europe is a key priority for the Commission, and this is where Next Generation EU comes into play. This is a unique opportunity, as we say now in both sides of the Atlantic, to build back better, to drive forward the green and digital transition and to shift to a more sustained and sustainable growth path. Greece was among the very first member states to submit its plan, see it approved, and receive a first pre-financing of 4 billion euros. This result is a testament to the quality of the Greek plan and the excellent cooperation between the Greek authorities and the Commission services, and my personal excellent cooperation with my friend Christos Staikouras. Greece plan has a good mix of investments and reform. If implemented fully, it will provide further momentum to the recovery and lift the country's long-term growth potential. Next Generation EU will help raise the EU public investment to GDP ratio to almost 3.5% in 2022. This is the highest level in over a decade. Going forward, we should try to maintain this high level of public investment. When the time for consolidation eventually comes, we need to avoid that it falls on public investments, as it did in many member states after the global financial crisis. This leads me to today's very timely discussion on the review of our economic governance framework, which we will relaunch officially in the coming weeks. Reforms of our fiscal common rules is urgently needed. Given the current levels of public debt across the Union, going back to the old rules without any change would simply not be realistic. This could seriously jeopardize the ongoing recovery. And again, let's not repeat the mistakes of the past. There is a need to reflect on a few things: how to reduce public debt ratios, absolutely necessary, but more gradually in a sustainable growth-friendly manner. How to preserve the level of public investment, essential for the green and digital transition, and how can the fiscal rules better support macroeconomic stabilization in the short term, especially when monetary policy is constrained. And I count on Greece to take an active part in this debate on the future of our union. Let me now end by saying a few words on our latest enhanced surveillance report that was published last week. The report concludes that Greece has taken the necessary actions to achieve its commitments, despite the challenging circumstances caused by the pandemic. For example, Greece delivered on a number of specific commitments across areas, including in the field of privatization, notably by closing the transaction on the iconic Hellinikon project. And this is very good news. And this is paving the way towards the foreseen exit from enhanced surveillance next year. The Commission is committed to continue working closely with Greece and the Eurogroup to support this process. So Greece has gone through so much over the last decade. We all know this. And my thoughts go in particular to the younger generations that have already experienced not one but two historic recessions, as well as a pandemic that confined them at home. We have a duty to prove to them that this time will be different. I'm confident that Europe has learned from its past mistakes and that together we can move away from the pandemic and build a better and brighter future. Thank you. Efaristo.
Thank you, Commissioner. This was a very dense and balanced, if you allow me to say so, presentation. You explained that things look encouraging and promising, but certainly we are not out of the woods yet. So we should learn from past mistakes and make the transition as smooth and productive as possible. Of course, let me now turn to Minister Staikouras and see his own view on Greece, but within also the European context. Minister?
Thank you, Nikos. First of all, I would like to thank you the organizers, the European Commission and the Foundation for Economic and Industrial Research for their kind invitation and for offering me the opportunity to share the digital floor with my friend, Commissioner Gentiloni, and discuss on an extremely interesting and important topic. For more than a year and a half, the European and global economies have been facing an unprecedented multidimensional crisis due to the COVID-19 pandemic, a crisis which caused a great deal of uncertainty and has had a great impact on fiscal policy and on fiscal priorities in every European country. Europe had to tackle this severe crisis and its social and economic consequences rapidly, methodically, and in a spirit of solidarity. Thankfully, Europe's response did have these characteristics. Important decisions were taken, including the activation and/or the enhancement of pre-existing measures to respond to the highly challenging circumstances. Furthermore, fiscal and liquidity boosting measures were activated. Just to pick up some of the important decisions taken at the EU level since, as you mentioned, Nikos, April 2020. Fiscal rules, targets, and requirements were suspended. The framework for state aid and public procurement became more flexible. The ECB has introduced the PEPP and has adopted a package of temporary collateral easing measures. Europe activated a safety net for states, employees, and businesses through the Coronavirus Response Investment Initiative, the ESM Pandemic Crisis Support, the SURE Program to subsidize employment, the Pan-European EIB Guarantee Fund to strengthen business liquidity, and of course, the Next Generation EU with its major pillars, such as the Recovery and Resilience Facility, the REACT-EU, and the Just Transition Fund, which were created recently. If we add the total amount available through the aforementioned safety net and Next Generation EU, a total firepower of 1.3 trillion euros, more than the multi-annual financial framework for the period 2021-2027, is available to support our economies and to lead to a strong and resilient recovery. At the same time, the MFF itself also offers us a vast amount of funds to implement policies and structural reforms that will form the basis for strong, sustainable, clever, and inclusive growth. At this point, I have to underline that Commissioner Gentiloni's personal contribution in successfully responding to the COVID-19 challenges has been crucial. Available data and a series of indices point out that thanks to all the above, as Paolo mentioned before, Europe is recovering faster than expected. According to the European Commission Summer Economic Forecast, on quotes, the volume of output is projected to return to the pre-crisis level in the last quarter of 2021, which is 1 quarter earlier than expected in the spring forecast for the euro area. Since early July, when the summer forecast was published, more positive data and even more optimistic estimates have come out, suggesting that the European economy will rebound strongly this year. The same goes for Greece. However, can't we just rely on this? The answer is definitely not. We have to continue and strengthen our efforts towards safeguarding a strong and resilient recovery, which will pave the way for high, sustainable and inclusive growth. To that end, as the successful handling of the coronavirus crisis has shown, policy coordination among EU member states is of vital importance, and EU economic governance plays a key role in achieving this goal. It is within this scope that we have to reform the Stability and Growth Pact, along with achieving the sustainable and substantial progress towards the completion of the banking union. I will elaborate more on these aspects, starting with the fiscal surveillance framework. First, and as far as the immediate future is concerned, I would like to recall the Eurogroup statement on March 2021, according to which, unquote, the Eurogroup is committed to a supportive stance in the euro area in 2021 and 2022, also taking into account the fiscal stimulus stemming from the RRF. And a couple of days ago, the president of the Eurogroup, Pascal Donoghue, stated that there will be no premature withdrawal of euro-based fiscal support. We fully support this approach. The continuation of appropriate fiscal support and the necessary preparation for a soft landing, from fiscal relaxation to the gradual and careful return to fiscal rules, targets, and requirements, will serve fiscal prudence while sustaining the ongoing recovery, allowing member states to effectively address remaining challenges caused by the pandemic. However, we also have to respond to other potential challenges lying further ahead. This is why I firmly believe that the discussion on the economic governance review will be crucial to shape the future of the European economic and our national economies on a solid, more resilient and sustainable basis, taking into account lessons from the current and previous crises. The starting point for this discussion is that fiscal sustainability is definitely a cornerstone for sustainable growth. Thus, it has to be safeguarded in the medium term. In this context, the central question we need to answer is this: do the current rules included in the fiscal surveillance framework, in other words, the Stability and Growth Pact, serve our goals in the most efficient way, given that the present economic environment is very different compared to the one within which these rules were formed? I think that the calibration of fiscal rules and their mechanisms can and should be reviewed in light of events and evolving priorities, precisely to help us achieve the full set of our policy goals. And here, I think we need to strike the right balance. Of course, through our decisions, we should signal that our fiscal policies are in line with long-term bidding fiscal constraints, otherwise markets will react. But on the other hand, we must also bear in mind that in light of the significant increases observed, as Paolo mentioned before, in debt to GDP ratios as a result of the pandemic, an adverse market reaction can also follow if markets think that we are overambitious regarding our chosen path for fiscal normalization. The credibility of fiscal policy not only depends on what we aim to achieve, but also the speed and the manner by which we aim to achieve it. As a result, in forthcoming discussions regarding the European fiscal framework, we should reiterate our commitment to medium-term fiscal sustainability and discuss with an open mind, based on a pragmatic and evidence-based approach, what is the best course to achieve it in a way that combines the optimal speed of fiscal adjustment along with the required safeguarding of fiscal credibility and sustainability. Furthermore, we should ensure maximum capacity of achieving output smoothing during episodes of future business cycle downswings, for example, through protecting public investment. Last but not least, when deciding about the main feature of our fiscal surveillance framework, we should be mindful of its links with the single monetary policy and the financial sector. Fiscal policy is a key, but not the only part of the overall policy mix, whose ultimate objective is to deliver sustainable, higher and inclusive growth. When debating about fiscal rules, we should have in mind this bigger picture, recognize spillovers among the individual components of the overall policy mix, and be able to see the wood for the trees, if you will allow me to use such non-technical language. In this context, properly calibrated amendments to existing fiscal surveillance framework should be explored and perhaps be justified. Greece, as always, will actively and responsibly participate in the forthcoming dialogue, contributing to the discussions with well-crafted, technically sound and credible positions, playing, as always, a constructive role in the debate. All the above cannot be seen separately from the ongoing procedure to complete the banking union. Greece places great emphasis on making progress with the banking union and has kept a constructive stance through ongoing discussions. We believe that the European Deposit Insurance Scheme is the main element of the banking union architecture that is still totally missing, as well as the central element around which the entire discussion on banking union developed in the first place. We believe that it is really crucial to have a timeline for the establishment of EDIS as the third pillar of the banking union, and a clear understanding that liquidity support schemes will be a transitory phase, followed by a transition to a fully fledged EDIS. We also look forward to achieving significant progress in the field of capital markets union. This has high potential to promote higher and inclusive long-term growth. In this context, we believe that the introduction of a European safe asset will make a very significant contribution and will also facilitate progress in the field of banking union. One more critical field in which Europe should seek to make further progress is successfully tackling poverty and inequality. As to the levers that could be used at national levels, I will mention 5 points in 2 minutes. The first point, a shift of taxation away from labor towards other sources. This should be done in a fiscally neutral manner. The second one, additional measures to increase participation in the labor market, especially among groups that are underrepresented, like women, migrants, and youth. Third, important reforms in education, which should increase the quality of the educational services provided and lead to a better alignment with the needs of the labor market. Moreover, upgrading the skills of the population may help close the digital divide, which is going to be the primary force driving inequality. Fourth, welfare policy, not only ensuring that the social safety net is strong and wide enough, but also providing the right incentives and preventing poverty traps that would perpetuate an unequal distribution of income. And finally, expanding the tax base will be instrumental for creating an inclusive and resilient economy and society. But this is an area where we can also consider initiatives at the union level. For example, we could explore ways of introducing a central fiscal stabilization capacity. This, if properly designed and calibrated, could entail significant risk-sharing benefits for all member states and the union as a whole, cushioning the impact of downturns on economic activity and employment. And the experience of this crisis and previous ones has shown such a mechanism would particularly benefit the more vulnerable sectors of our societies, thus making an important contribution towards limiting inequalities and properties. The widely acknowledged success of the SURE program in achieving these objectives during the present crisis justifies the validity of this proposal. To conclude, I am convinced that all my European colleagues and all the European governments stand ready to further cooperate in order to ensure strong recovery and to bring out Europe as a power of peace, democracy, growth, and social cohesion. A power which was created step by step on the base of solidarity. In these challenging times, it is our duty to remain united and to provide a bright and promising future for our children. It is our duty and we can make it. Thank you, Nikos.
Thank you, Christo, Minister Staikouras. We have just a couple of minutes for, I guess, a quick round of questions. And I guess the question would be one and common to both of you, in case you want to comment on parts of it. No matter how you look at it, the last year and a half has been full of surprises. Such a deep recession with unprecedented characteristics. Then the recovery has been surprisingly strong. Monetary and fiscal policy moving in ways that have been certainly away from what we consider normal. And at the same time, European institutions and local governments also reacting in ways they have not reacted before. So I guess the question is what we have learned from this crisis. We've had the Eurozone crisis more than 10 years ago now. Now we have this COVID-caused crisis. There is no guarantee that we will not have another crisis again, but even if we don't, how we achieve strong growth. From your viewpoint, what is it that we have learned over the last year and a half, especially for how policy interacts between the EU and member states? I guess we have to start with Commissioner Gentiloni on this, if he wishes.
Yes, thank you. Well, it will be a long, of course, speech on lesson learned. I would mention three main points. First, you need to react fast and strong. And this initial reaction was probably decisive. Just to remember the fact that we had the declaration of pandemic in March the 11th, and the main decisions were taken by the European institutions between March 14th and March 16th. I mean the purchase program of the ECB, the suspension of the Stability and Growth Pact and of the state aid rules. So immediately, and then react strong, because as Christos just reminded us, the firepower, well, first common tools, unprecedented, and second with substantial firepower in the table, what Minister Scholz called a bazooka was there. Second lesson, I would say, of course, solidarity, coordination among member states. Solidarity at the beginning was moved first by the drama we were in, and second also by the concern of increasing divergence among the single market. These two things brought to unprecedented common decision, but now coordination will remain essential in the transition from the bazooka to more targeted and selective measures, but without tightening too soon and repeating mistakes of the previous crisis. Third lesson learned, I think, is that we had this time, very different from the previous crisis, a good interplay between fiscal and monetary policy. Of course, we don't have a common management of this because we have autonomy in both monetary and fiscal policy. But of course, the interplay was made possible because the fiscal policy has been there with coordination and firepower. It is not only a matter of goodwill. You can coordinate fiscal policy if you have firepower. You can have a good interplay with monetary policy if the fiscal policy has some teeth and rules that are realistic. So this is also the challenge for the future, how we keep this interplay going without any, of course, attempt to undermine our autonomies.
Thank you, Commissioner, for your insights. And these are clear messages, I guess, all three of them. Minister Staikouras, we can now wrap up the session with your own response, what we have learned, and also in the interplay between EU policy and what has been the role for that for Europe, for Greek policy.
Thank you, Nikos. In order to be honest, I raised 5, not 3 issues. Fast and strong reaction, solidarity, coordination at the EU level, firepower, and the synchronization of the fiscal with the monetary policy. So I fully share these priorities regarding the lessons from the recent crisis compared with the previous one. At the level of the member states, what we did was to implement timely and temporary fiscal measures in order to create this safety net above households and enterprises. But in order to be complementary with what Paolo mentioned before, and as you mentioned, Nikos, before, the life is full of surprises. So we should not lose the main target and the main direction of our economic policy. Thus, we use these 15, 16 months in order, first of all, to implement a prudent fiscal policy in the direction of further reducing taxes and social contributions. We maintained a significant amount of cash reserves through the implementation of a consistent and coherent debt issuing strategy. We promoted sustainable credit expansion through reducing NPLs on banks' balance sheets. We implemented a lot of structural reforms and privatizations. Paolo mentioned before the case of Ellinikon, and we will discuss this on Monday at the Eurogroup level. And finally, the timely and efficient use of available European funds. So we use this time in order to continue implementing our economic policy. I think this is one key message. Thank you.
Okay, many thanks. So, Commissioner, Minister, thank you. Let us hope on the occasion of our next conference, we can do this in Athens, for sure. We now move to the rest of the conference that is going to open up the details on the more micro and level, thinking about what the RRF and other tools can help us on the road ahead, which will not be necessarily easy. So thank you both.
Thank you, Nikos. Thank you.
Thank you.
Okay. Okay, good afternoon. My name is Yannis Paleologos. I'm the EU correspondent for Kathimerini newspaper and Sky TV and radio. And it's my great pleasure to moderate this next panel. A few words of introduction from me before we get to our speakers. Recovery and Resilience Facility, which is the main instrument of Next Generation EU, was by all accounts a watershed moment in the fiscal history of the EU. The health and the economic devastation of the pandemic, the increasingly urgent ability of member states to deal with the latter, threatened to reopen hostilities between the North and the South and to undermine the integrity of the single market itself. Facing that prospect, Angela Merkel finally overcame her qualms about commonly issued debt and transfers and signed what eventually became Next Generation EU. Even after the leaders of the 27 member states agreed on the terms of the recovery fund, though, after the almost longest summit in the history of the EU, there were many more obstacles to overcome. Fraught negotiations with the European Parliament, the insistent opposition of Hungary and Poland to the rule of law mechanism, tying disbursement to respect for European values, the process of ratification of the own resources decision in all 27 parliaments, and so on. Finally, though, last month, the money began to flow. Greece was among the first recipients of the 13% pre-financing, or about, in the Greek case, about 4 billion euros in loans and grants. And this reflected the fact that it was one of the first countries to submit its national recovery and resilience plan to the European Commission before the soft deadline of April the 30th. The Commission approved the plan on June 17th, and the Greek plan includes 331 milestones and targets, on the basis of the completion of which the country will be requesting 1.7 billion euros in grants every 6 months and 1.8 billion euros in loans every 12 months, all the way up to the second quarter of 2026. It is a detailed blueprint for the transformation of the Greek economy in a more green and digital direction according to the priorities of the EU. And in accordance with the RRF regulation, more than 37% of the investments to be funded are related to the green transition, 37.5% if I'm not mistaken, and about 23% is related to digital. The floor there being set by the regulation is 20%. And the Commission projects that the implementation of the plan will increase Greece's real GDP by between 2.1 and 3.3% by 2026, a margin greater than is the case with most other national plans. In this session, we have three speakers who are eminently well suited to talking about the Greek Recovery and Resilience Plan, its virtues and strong suits, but also its blind spots and potential implementation challenges. Theodoros Kyllakakis is the alternate Minister of Finance and the political supervisor of the plan. Alexis Haritsis is Shadow Minister of Development and Investments for Syriza. And Declan Costello is Deputy Director General of Economic and Financial Affairs at the Commission, and of course, formerly the head of its mission to Greece during the third bailout. So without further ado, I will turn first to the Minister for a short opening remarks. Mr. Kyllakakis, what can you tell us about the philosophy behind the Greek plan and how it fits with the government's ambitions to transform the Greek economy?
Well, the transformation that the Greek economy needs is very clear. It's an economy that needs to move from introvert with high participation of the gray economy and with very, very low investments, half the European average for the last 10 years, to a country that has big investments that will cover the loss of capital that we had for 10 years, a country that is a lot more extrovert, and a country that has a much bigger part of the economy being white, which means better rights for workers and more resources for the social responsibilities of the state. Now, this transition is very clear, and it also includes the ability of a large number of our businesses, which are in the small and medium sector, to become more competitive and resilient to economic events. And this is of utmost importance for us because there are huge resources within that sector, and their the improvement of their productivity is going to be absolutely essential for the movement of the economy as a whole and the country as a whole. Now, this is the main focus of the plan, and within that, we also have, of course, the green transition. Greece, as you know, has been in terms of the actual green transition with our government very ambitious, because we decided to move a lot faster to deglinitisation, and this is very important, as we see, because now the money that we pay for CO2 for lignite is so huge that lignite is absolutely non-competitive, even if one wanted to keep it as a fuel. So for us, the road is very clear. We need to move faster to the new green transition. What has happened in the summer and the events of the last year, where we had in a year the biggest snowstorms, Mediterranean cyclone, the big heat wave, which was the biggest in almost recorded history in some aspects, plus a freeze that has devastated our agricultural sector and has caused more than 100, maybe close to 200 million damage to our agriculture, more than that, in fact, is showing that Greece is also a climate hotspot in terms of climate adaptation. We have paid the price for the wildfires, and in our mind, a big part of the plan is used, almost 1.5 billion for climate adaptation purposes as well. And so the plan has important aspects in the green transition, and for us, it's not just a must-do because of the European regulation. It's a must-do because it's absolutely essential for the survival of the Greek economy and society, the survival and thriving of the Greek economy and society, the green transition, both in mitigation and adaptation. I'm putting special emphasis on adaptation because I believe we must do more on that. Thirdly, the plan has a social aspect. It puts big investments in health and education, and it has a special use of the loan facility, which I'm very proud of to have prepared it and made a lot of discussions with our excellent cooperation with the European Commission on that, and with the European financial institutions, which are going to be a big partner in its implementation. This plan will play an essential role in investments in the next 5 years. because it gives the opportunity for Greek businesses to overcome the inequality in terms of the cost of loans that they have compared to the Eurozone average. As you know, Greece for many years had a difference when I presented the plan, that the difference was about 200 basis points in terms of cost of borrowing for investment. And it's obviously that for various reasons, which is not the time or the place to discuss, this was not a level playing field for a Greek business that had exactly the same, as we call in economics, ceteris paribus, the same exact prospects or parameters with a business in another part of Europe. So this program, I believe it's going to start very soon, and it's going to be a very important for us in the future. Now, these are the main aspects of the plan. I can talk to you for hours about it, but I think it's better to let the other speakers and maybe answer more questions on whether.
Excellent. Excellent. So, moving on to Mr. Haritsis, what would Syriza have done differently in preparing this plan, and what do you see as its main problems, areas where it might not turn out as the government hopes?
Thank you, Mr. Paleologos. Thank you, first of all, for organizing this very interesting session. Let me start on a positive note. Let me say that on the European context, I think the existence of RRF per se is a very important positive step for Europe. We remember that Europe only dealt with crises in the past with austerity policies, even punitive policies in the case of Greece. RRF introduces a completely different philosophy of expansionary policies and of mutualization of burden. And I think this is something very, very important. And by saying that, I also want to stress that this kind of mechanism needs to become permanent. It shouldn't be just a one-off exception to the rule. In order to achieve inclusive green growth, which is the main objective of RRF, and to tackle inequalities, we need to have such a mechanism in place on a permanent basis. So I think that we are on the right direction, but we need to keep driving in that direction. Now, in terms of what's happening with the Greek plan, by studying plans from several different other countries, we have realized that some countries chose to present a plan with not just the absorption of funds in mind, but also with a more ambitious, I would say, strategic target of changing their production model, with domestic added value at the core of the plan for green transition, for digitalization, for the main European priorities. But also with the understanding that using this funding just to increase their imports would not benefit their economy. It would be a wasted opportunity. I'm afraid that the Greek government does not follow this path. The critical element from our point of view at this point is tackling inequalities. Inequalities are a burden to sustainable growth. We believe that the Greek government, the current Greek government, although the international discussion at the moment is trying to address those issues, we see even conservative voices or from institutions that are not famous for their progressive, let's say, outlook, trying to find solutions, but still we have ministers of the current government insisting on trickle-down economics. As President Biden reminded us a few months ago, trickle-down economics just never worked. We see examples from countries like Spain, for example, where they have a very ambitious energy transition plan through a 5 billion program of energy transition just and inclusive, with local authorities, with stakeholders like SMEs playing an active role through energy community schemes. We see Portugal, for example, where the whole funding management goes through their development bank. This means that public policy making and funding will, the economic benefit actually of this funding will spread across most economic actors. In the Greek case, I think the problem started with the fact that we didn't have any formal and any productive public consultation. There's no way that transformation of the production model can happen, can take place in this way, because we strongly believe that RRF is not just about funding. It's also about planning. And there's an important issue where I think we agree with the government on, which is that one of the key challenges to address is the funding gap that we have in our economy and has been accumulated through the last decade of crisis. But the main question here is, how is this tackled? How is this funding gap tackled? Through a recycling of the existing model, through funding only those who already have access to different funding sources, or through the expansion of our production base with sectoral targets, for example, industrial policy, which I don't see any policy for the industry in the Greek plan, with regional specialization. We see France is doing in their proposal a very comprehensive regional structure around it, with an emphasis on SME, for example, SMEs, as Spain is doing in their proposal. The key objective here is to create domestic added value for our economy. I'm afraid this is a model that is not followed by the current government. One other area of criticism from our side is monitoring of implementation. We strongly believe that there should be a very transparent way to monitor how the absorption of this funding is implemented. And our proposal was very concise, I think. It was the proposal that we presented in the parliament to create a parliamentary committee with the participation also of social and business stakeholders in order to have a formal monitoring of the implementation. Here, for me, this is an issue that I raise maybe too often, but I think this is very important, and drawing from my experience in the government. What we are lacking as a country is continuity and institutional memory. This is a huge drawback, I think, for the country. And we should take advantage of this historic opportunity in order to create structures, functions, which we are currently lacking in public administration at all levels. We should aim at complementarity with other important funding tools like the new ESPA, the NSRF. Unfortunately, this opportunity is more probably going to be lost, since the government chose to manage the whole program through an ad hoc task force at the Ministry of Finance, which will cease to exist upon completion of the program. This is, I think, a very important issue that we also raised in the parliament, but we should have further discussions in the future about how we create institutional memory in our public administration through programs like RRF. Now, if I could have a couple of more minutes, a couple of points I wanted to raise about loans.
Very quickly, because there will be time to discuss this.
Okay, just for the discussion, I think because loans, this is the part of the program that mostly has to do with the private sector. Mm-hmm. I think there is no provision there for an employment clause for retaining jobs, which should be a key priority. This is a huge issue for us. And then there is no strategy for the geographical distribution of loans for SMEs. this, I'm afraid, will lead to the increase of regional inequalities. Again, this is an issue that should be addressed. And last but not least, this is personally for me, this is very important. There is no plan at the moment to tackle the special challenges that startups are facing. If we really mean that RRF should be the vehicle for the transformation of our production base, then the Greek plan should include special provisions for high innovation, but also high risk business endeavors. Our proposal in that respect includes a much more active participation of the Development Bank in order to mitigate risk. And drawing from our experience in the government, this is exactly what we did in 2017 when we created Equifund. This is exactly why this initiative, Equifund, was very well received by the business community, especially startups. I think that now that we have the opportunity of the RRF, we should use it in order to provide more opportunities for high risk investments.
All right.
And
all right.
one last point.
Very quickly.
One last point, very, very quickly, in just 30 seconds. We always use the acronym RRF. We should never forget that RRF means recovery and resilience. We should never forget the second part. Resilience is equally important. And what we have seen in our country, but in other countries very, very recently, like Germany, for example, or Portugal and Spain, we've seen recent disasters, which we cannot exclude from this program. Mr. Minister mentioned 1.5 billion for climate adaptation. I think that this is not enough. We need to do more, and most importantly, we need to have a strategy on how we are going to tackle this issue and how we're going to increase resilience in our society, given what we are facing and what we will be facing in the near future with the climate crisis.
All right. Lots to chew over there. I move directly to you, Mr. Costello, to ask you. I mean, the Commission has obviously a very central role in all this, in approving the plans to begin with, and then in monitoring their implementation and the completion of the milestones and targets. A lot of work for you in the coming years. From these early months, I wanted to ask you how tricky it's been to sort of, on the one hand, obviously fully respect the ownership, the national ownership of the plans, while on the other hand, making sure that the milestones and targets, especially when it comes to reforms, are specific enough for there to be meaningful monitoring. And also touching on an issue raised by Mr. Haritsis, are you concerned that the Greek plan will not be properly monitored, or are you sure enough of your own monitoring powers to be okay with that?
Yeah, thank you, Yanis, and good afternoon, everybody. I mean, it's a real pleasure and honor to be able to address this audience, and also I think to be able to speak to you about the implementation of the Recovery and Resilience Facility. This instrument didn't exist 12 months ago. There were many doubts that we would actually get it up and running by summer, but here we are with some 25 plans in, most of those approved and in the implementation phase. I think, you mentioned, I mean, just to stress, I mean, what the significance of this opportunity. Yanis, you mentioned the importance that for the first time we're able at European Union level to borrow money and to provide solidarity and support on a macroeconomic scale, and also to ensure that fiscal policy is supportive of our economic recovery, something that was lacking in the period of the global financial crisis. But I want to stress two features of the plan, which I think they've been mentioned, but I think it's really important to emphasize them. The first is, this is the first time we have an instrument at European level which combines reforms with investments. In the past, we have had our European semester where we could discuss reforms with member states. We have also had, of course, the structural funds where we could provide investment support for long-term economic development, but they operated in almost separate tracks. And now we can really combine, as I say, reforms with investments, and both are needed. It's not, I fully agree with what Alexis said, it's not only about money, it really is about combining reforms and investments. And I have to say the Greek plan is actually a good example of how this can be done. The second element which I want to stress is, again, it's a very different instrument to anything we've had before in that it is performance-based. The funding available under the Recovery Resilience Facility will be released on the basis of outcomes, performance outcomes. It's a performance-based instrument. Member states complete milestones and targets, and if they do, we will disperse on this basis. It's a very, very different model to traditional European Union funding instruments, which have been based upon very detailed plans, but reimbursement occurring on the basis of incurred costs. I think this model of performance-based instrument, it offers us the opportunity to really focus on the outcomes and hopefully to be able to act much more quickly with much less administration than we've had, much less administration we've had in the past. So that sort of starts to answer your question about the capacity to implement. If done properly, the fact that we focus on outcomes, milestones and targets should make it a more manageable and operational instrument in terms of implementation. Now, just a couple of quick words on the Greek plan. First, obviously, the Commission, but also the Council, had a very, very positive reaction to the Greek plan. It was, of course, one of the first. I mean, there's several reasons which lie behind it. I think first, in terms of its overall design and components, I think we recognize in the plan that it is addressing many of the sort of long-standing structural weaknesses or shortcomings that have bedeviled the Greek economy. So, there's a lot in there on the modernization and digitization of the justice and public administration. That's clearly, something that's been a weakness for a long time. A lot in there to continue efforts to modernize the business administration, help SMEs, and also tackle the very, very significant investment shortfall which the minister mentioned. And also, of course, it's balanced with the need to invest considerably in skills. Now, whether that's digital skills which are lacking, or the skills which will be necessary to actually roll out the green transition. So I think we do recognize that the content of the plan matches what our assessment would be of where the growth bottlenecks are. The second thing I think which we appreciate is we do see continuity. We've obviously been working very closely with Greece over many years with different administrations, and I think it's good that this plan, I think, builds upon the achievements of recent years. And here I want to give credit to successive administrations to do that. I think the fact that it takes things to the next level and to the next step is to be welcome and was certainly much appreciated by European partners. If I can just close on what the real challenge we see for Greece is implementation. I have to say, when it comes to the reform agenda, I think there's a lot of consensus with the Greek authorities on what needs to be done. if I had to put my pinpoint an issue which I think would be the biggest challenge, it's actually ensuring that the investments and the procurements are executed on time. It has been a weakness in the past that investment projects have got delayed due to difficulties in having a proper investment pipeline. Now, I think what we do welcome in the plan is there has been a sort of from the outset a considerable focus on not just designing a plan, but how is it going to be implemented. So you will see in the plan elements there to strengthen the capacity to design and manage investments, to modernize or continue to improve the effectiveness of public procurement, and also turning a bit to the governance of this. Here, I think we do welcome the fact, and we have experience now with many countries, the fact that there is a dedicated entity. The minister, of course, has been in charge of that, which clearly has the support of the prime minister and clear lines of governance. Our experience in negotiating the plans is that model has been pretty effective. I would nonetheless like to acknowledge what Alexis mentioned on the importance of the consultation of stakeholders and building a wider consensus around it. I mean, that's a matter for the Greek authorities and to decide. But I think we do attach importance, and we have been stressing the importance of involving stakeholders. So I think, yes, it's implementation is the key. The fact that it's an outcome-based instrument will help with that implementation. But that is the critical challenge, I think, especially in the Greek case. Thanks a lot.
Thank you very much. I'm gonna go through a round of questions with all of you first, and of course, feel free to jump in if you want to add a comment to something that you heard before. And we'll also be getting some questions coming in from the audience, hopefully soon. But beginning with you, Minister Skylakakis, there was a criticism from Mr. Haritsis, which can probably be summarized as the plan of the government focuses on insiders, on entities which would be able to get funding anyway. It will increase regional inequality. It leaves the startups out of the equation, and that it's it's emblematic of the trickle-down approach, which has failed on a number of fronts. How do you respond to that? We can't hear you, I think.
Okay, let me start by saying that I would get back to the whether we have a new model. I have very in a detailed way. Please, someone is talking over my voice. Okay, whether we have a new model in our mind. I have in a detailed way. Sorry, someone is...
We're hearing something breaking into the conversation.
Okay.
Please continue.
So I have in a detailed way presented what we believe is the new model. We need an economy that has investment. In the previous year, we did not have investment. This, in my mind, it's strange that Mr. Haritsis does not even mention it, is when you don't have investment, it's not a matter of whether you have inequalities or not. You have the road to poverty is assured, because a country with half the investment of its partners for a long time goes into poverty without any question mark on the road to poverty. It goes to poverty because if you don't have investment, you don't have physical capital, your people leave, they migrate, and then you are more poor. And if you don't have investment and you are also have 300+ billion euros of debt that you have to pay, you have no future. Then your future is not being able to tackle inequalities. You have to tackle massive poverty. That would be the future. So in our mind, getting investments back is the most important part of this plan. Plus, extrovert instead of introvert, and white instead of gray economy. These are the three changes in the model. And I have not seen the opposition saying, yes, we need these three changes. We need to double our investment because we have to get back to the European average. We need to have a smaller gray economy because workers are not properly, do not have their rights in a gray economy. They don't have the ability to have social contributions for their pension. They don't have proper rights in terms of the protection of the workers' rights. So for me, and of course, tax evasion is a real problem. We cannot say that there is no problem of tax evasion when we know that the VAT gap in Greece is about 27%, or one of the biggest in Europe. So that's about the model. Now, about we need to have we need to change the model. And the problem of the model is not that we don't have industrial policy, or if we don't have regional specialization, or that we don't have employment growth. The problem of Greece was massive unemployment. That was the real problem. And the change will be of increasing employment within this plan. Now, in terms of who will participate, everybody is going to participate, and we make it easy as much as possible for smaller businesses to participate. But this is an investment program, investment and reform program. We cannot have people that don't want to do investment and just want to take money out of the program. This has been the real problem of all the programs implemented in Greece. Many people wanted to take money out of the program rather than making investment. The investment was a prerequisite for taking the money out of the program, and not the vice versa, that you wanted the investment, and because you wanted the investment, you needed some money. So everybody that wants to put money in the program will be able to do that. Not much money, 20% in the loans. It's just 20% of your own capital. It's not much, but we do not intend to have a program where people will come to take money and use it as a facade for the white elephants of the past, or what has happened in areas like in Thrace in previous decades, where we have a lot of empty buildings of failed investments. We want successful investments. And
all right.
This is
all
it.
Right.
And to finish about the adaptation, I believe that we need, as a country, more money for adaptation. And we will take the initiative, and we would be glad to discuss in a positive way with all the stakeholders and the opposition about it.
Okay, thank you very much. Mr. Haritsis, your criticism, does it imply that were Syriza to return to power before 2026, it would seek to change the plan in meaningful ways? And also, you mentioned the consultation and the need to get the views of the opposition and so on. Is there really today the political space for that in Greece? Would Syriza have done it if you were in power when it came time to draw up the plan?
Yes, Mr. Paleologos, let me start by saying a couple of things about investments. Maybe Mr. Schilakakis did not hear my first intervention. He would remember that the first thing I said was that currently in the country we have a funding gap that needs to be filled. And of course, this needs to be filled with investment. But the main question here is whether we will have investment that will create domestic added value, or we're going to have what happened in the past, in the previous decades. And of course, Mr. Schilakakis, I'm sure he was referring to the time when parties from the old political system were in power, not my party, in previous decades, where we had this gray economy that he described, where we had European structural funds, billions of them, that were wasted away without any added value to the economy. And I was very specific when I mentioned some key areas where I see very important issues that need to be addressed and have not been addressed by the Greek plans. For example, the regional structure of the plan. What are we going to do in Western Macedonia now, for example? Or what are we going to do in Thrace that Mr. Schilakakis mentioned? Do these regions have are facing the same challenges? Do they have the same opportunities? So this is a very important issue. What's going to happen about the SMEs? I don't see any specific program about the SMEs as I see in the Spanish or the French plan, for example. And Mr. Skylakakis mentioned people taking the money and running away or something. I was very specific talking about the loans, the 12.8 billion of loans, which of course needs to be returned. How are we going to use this funding? Are we going to have an employment clause, or all this discussion about tackling unemployment is just wishful thinking? Are we going to have specific provisions for high risk endeavors, business endeavors, in order to change the production model, in order to give the opportunity to younger people, for example, to benefit from this kind of projects? I was very specific to use the example of Equifund, which is exactly what we did in 2017, 2018, in order to be able to address the issue of high risk investments not being able to reach adequate funding. And I think when we are talking in our country about the new production model, I think we have to be specific. A very general, bright picture about how we're going to change the production model, I don't think that benefits the public debate. And of course, as you mentioned, Mr. Paleologos, I think public consultation, it's not just a matter, let's say, of getting everyone on board and not letting them complaining about not being part of the process. It's also a matter of efficiency. Talking to the people from the business community, talking to the people from the local authorities, talking to the people from universities and research institutes, gives us the opportunity to know what the challenges are, what the problems are, what the opportunities are for these very important parts of our society. And to answer your question, you mentioned what we would do. Oh, I will tell you what we did. In 2018, we created the National Growth Strategy. The National Growth Strategy of 2018, which was presented in the Eurogroup of, I think it was, if I remember correctly, April 2018, was exactly the outcome of regional conferences that we set up in all different regions of the country in order to get the views and the proposals from the society itself and from the different stakeholders. Now, about what a new government would do, I think it would give emphasis to this kind of areas that I mentioned, to SMEs, to a just, as the Spanish are doing at the moment, to the just and inclusive green transition. Why don't we use energy communities? This is a very important institutional framework that we now have in place since 2017 by the government.
So you would seek to change the plan?
No, we would seek to redirect the priorities. We know what the plan provisions are. We know what the room for readjustment is, and we are going to use it in order to rearrange the priorities, in order to benefit those who need to be benefited, in order to have, if you speak at the moment to all the regional governors in Greece, they have absolutely no idea what's happening with the Greek plan. If you speak to the representatives of the business community, especially the SMEs, they have absolutely no idea what's happening with the Greek plan. These need to be addressed. And again, it's a matter of efficiency as well. It's a matter of democracy, but it's a matter of efficiency. And this is where we would give more emphasis on.
Okay, Mr. Costello, you mentioned your, let's say, concern that in certain areas in some investments, there may be some delays because the track record hasn't been great in the past. On the reform side, I wanted to ask you if there are cases where the formulation perhaps is not specific enough and might make it hard for the Commission to ascertain whether the Greek authorities have achieved what is needed in order to get the requested funding. And also, I'd like to ask you, this is, you repeated something that we've heard here in Brussels before, that there was actually quite a warm response to the Greek plan when it was presented. Do you think that can be partly attributed to the fact that, you know, the Greek public administration got its difficult training in the bailout years and therefore was more prepared to present things in a manner that would be embraced by Brussels?
Yeah, no, thank you. I mean, I think on the plan itself, as I mentioned, I think what was appreciated was the comprehensiveness. I think I mentioned the fact that it was the continuity. It wasn't that it was clearly an effort to build upon reforms that have been undertaken in recent years. I mean, a good example could be in the area of public procurement, where, I mean, there have been, efforts over several years to modernize public procurement. Okay, then there was a recent law, further efforts to professionalize this. I think, and the fact now, of course, for the first time with this instrument, we're really able to put serious money or serious investment behind these reforms to make them happen. I think this was an important part. So I think, again, it was really good to see, Greece almost being first, or I think it was the second country to submit with a high quality plan, very much, to the front and in the lead. I think this was really appreciated. In terms of, I mentioned quite a bit about the implementation risks, and I focused quite a lot on the more spending or the investment side. As regards reforms, I would say that we don't have. Obviously, we will have to discuss and check that the commitments which were given in the milestones have been adhered to. But to be honest, I think relative to some of the other plans, I think many of the reforms are not. I think maybe not hugely controversial. Because Greece, of course, has undertaken a dramatic amount of reforms in recent years. Many of them extremely difficult. And the objective here is not to just to do reforms year in, year out, but more to have continuity and in the process. So if I take what's coming up in the first disbursement, we have a waste management law. It's an important law. It needs to be discussed, but of course there's many sort of technical aspects of that to ensure full compliance with the EU directives. But it's not a hugely, I would say, sensitive or probably very, very, compared to some of the very difficult reforms we've discussed with Greece in recent years. I really think the focus, and I think a bigger challenge will be on the investment side. But as I said, I think the challenges have been recognized. I think within the context of the plan, working with the Greek authorities, I think we've done what we could reasonably be expected to do at the design phase. So working on the project preparation facility to help, mature and develop large public investments. I mentioned the law on public procurement, and that, of course, now needs to be implemented, including the digitization, professionalization of the public procurement system. And then there's a whole host of other reforms, training within the public, the public administration itself, also at local and regional level, to ensure that the projects are rolled out. Reforms in the justice system, which could hopefully overcome some of the problems that we've seen in recent years. Again, I think it's a whole series of efforts to focus in on this implementation challenge. Again, but that's at the level of the plan. It all will come down, of course, to implementation. Thanks.
All right, I just want to broaden the scope.
If I may, Mr. Paleologos, just to clarify something.
Sure.
Because Declan mentioned again about implementation, and very rightly so, the service of the Commission will have, of course, their own very thorough and very comprehensive mechanism of monitoring implementation. What I mentioned in my intervention was mostly about domestic implementation. Okay, that's a different level of monitoring the implementation, which I think, and in my mind, that I think from the discussions we've had with different stakeholders, this is equally important, to have a domestic monitoring system which will be transparent, which will be as public as possible, in order to monitor the progress of this program.
All right. I have a question here from the audience, which is for Mr. Costello. I'll read it out. Given implementation challenges that may come up and the volatile global environment, can the selection of RRP investment projects be flexibly revised both within and across its pillars?
Okay, so the regulation on does provide for updates or adjustments to the plans when there are objective reasons for doing so. But I should emphasize that there's a very, very strong emphasis on continuity and not to have constant changes and updates to plans. Now the reason for that is, especially when we're talking about the investments, whether it's on the green transition or on the digital side, whether it's connectivity or putting in place large scale schemes to upgrade the digitization of businesses. There's very long lead times in this. One has to design the intervention. One has to issue the procurement order. There then has to be the implementation and rollout, and this can take several years. I mean, please let's recall the sums of money involved are huge. The grants alone are close to 9 percentage points of GDP. We will be every 6 months we will be transferring approximately 1% of GDP to Greece. It's a lot of money, and given the long lags and time involved in these investment projects, you simply cannot be changing them all the time. It's really important also to bear in mind, there is a strict cutoff date for this money. If this money is not dispersed by 2026, it's lost, it's gone. So yes, I think there can be adjustments for objective reasons, but I think there is really a premium on continuity if, to ensure that these funds are absorbed to the full. Thanks.
All right, and one question on which Mr. Haritsis has taken a position, a number of EU countries have also taken a position. I'm not sure if our government has taken a position, is about whether we are keen to see this massive instrument made permanent. Mr. Skylakakis, is there a position of the government on this?
Yes, the position of the government is quite obvious. If we're to make it permanent, which is something that obviously a country like Greece would like, we need to implement it successfully. That's the biggest contribution that we can make into making it permanent. Anything else is words. Words, as you know, are cheap and sometimes they're effective, but when we are talking about moving massive amounts of money from taxpayers of various European countries, you have to build trust. And what we have tried is to build trust into this program. That's why we try to be among the first to present it, to be meticulous in its detail, quite uncharacteristic of our traditional image, to include as many specifics as possible, including a part of the program for high-risk investment for startups from the loan program. 500 million go there through TANEO, Mr. Haritsis, which means that your wish, at least one of your wishes is implemented in this program. And also, I have tried as a person responsible not to put emphasis as much in communication and do a lot of consultation in informal ways, because we did also the formal one. But in my mind, we will need to do consultation during the whole implementation of the plan. And we also need to understand our stakeholders as as kind of clients, and the SMEs need to be massively informed about the opportunities, But this needs to happen when the product is on the shelf. When you advertise in something and people go to the grocery store and don't find your product, then it's not that they will buy it next time. They are very angry that they don't find the product. So we must first have all our programs ready for the SMEs, and then we will do massive consultation and communication efforts, including the specifics of the tenders that are going to be there. For example, for the loans, we did a consultation last week for 7 days, and I had quite a number on the eligibility of the loans, and we had quite a number of people reacting. We will need more people to react, but in essence, we have to move. This is a program where if you don't move, you are dead.
Do you share the concern voiced that maybe Greece's institutional infrastructure, despite improvements of recent years, may not be up to the task of...
I will answer with numbers. We were absorbing about 5 billion real euros in terms of public investment up till 2019. 4.55. That included a lot of things that were not public investment for various reasons. We have to go to 10, 8 to 10. Now, this is close to impossible if we don't dramatically change the ways that we work. And we will do that. We will dramatically change the ways that we work, but and be very efficient and use every aspect, every ability that we have and every help that we have. But we have to understand, moving from 5 billion real absorption to 8 to 10 is a huge, huge task.
We have about a minute remaining. Are there any closing remarks that Mr. Haritsis or Mr. Costello want to make?
Declan?
Sorry, very little. I mean, just to underline just how excited I think everyone is in the Commission to sort of enter this new phase of cooperation with Greece. It's really, it's very exciting for us to be able to do that, and really, again, to for the first time in a long time, to be able to come and discuss the key issues, but also to have significant financial resources to bring about the transformation in a much quicker and also fairer way, because I think a lot of the issue, having the financial resources of the facility is, there always are costs. There always is a need to bring those people who are affected by the transformational change with us, so that so that everyone can benefit from this. I also want to just really underline again what I mentioned about skills in the agenda. I mentioned a bit about the administrative risks when it comes to the implementation, but I actually do think that one of the sort of pressure points that will probably emerge, not only in Greece but across the European Union, is the availability of skills, particularly for the digital and green transition. These are likely to be very, very job-rich investments, and if you look at the availability of labor out there, we simply don't have the numbers with the necessary skills. The emphasis is on building better, but we're all trying to build back better in the same way. So I again really put a lot of emphasis on the skills and training agenda. Thanks.
Mr. Haritsis, in 30 seconds, is there something you want to close with?
30 seconds. Okay, Mr. Palaiologos, thank you very much. We talked a lot about absorption. I know a thing or two about absorption from my years in the Ministry of Development. I have to say that there's always a very thin line that you have between speed and efficiency and actually economic and social result of your work. That's why I insisted on institutional memory that needs to be built using this opportunity. Look, here we have a historic opportunity with RRF. Either we're going to use it in order to support our production base and transform it in the process, or we're going to have what happened in the country the last 3 or 4 decades. I'm afraid, and actually it's not my personal, let's say, just my personal concern, but what I'm hearing from the business community, from the local authorities, from the people on the ground, is that there's a lot of ambiguity and a lot of concern about whether the funding will actually reach those that needs to benefit from it. But we're going to be here. We're going to be monitoring very, very closely what's happening, and we'll do our best to contribute from our side. Today from the opposition, tomorrow Mr. Schilakakis from the government, in order to make the most of this very, very important financial instrument, this European financial instrument that needs, again, that's my last word, needs to become permanent.
All right, a historic opportunity, and we'll all be here watching to see what comes of it. Thank you all very much. This wraps up our session, and enjoy the rest of the conference. Thank you very much.
Κυρίες και κύριοι, καλησπέρα. Καλησπέρα από την Αθήνα. Let me switch in English now, since our audience is supposed to listen to English. We carry on with our next topic, which is digital transformation of the Greek economy and the public administration. For many years, this discussion, let's say, was an ongoing discussion and kept being a joke. However, the last years, with the help of the Minister Pierakakis, something has really changed in this country. Let's see how things are for the time being. We have a very interesting panel, very important panel. Let me welcome Mr. Kyriakos Perakakis, Minister Perakakis. He is the Minister of Digital Governance, and also you have your name day today. Receive our congrats, Minister.
Thank you so much.
Χρόνια πολλά, Υπουργέ. Mr. Stefan won't be with us. Let me also welcome Thomas Skordas. He's the Acting Deputy Director General of DG Connect of the EU Commission. Welcome, Mr. Skordas. Let me also welcome George Pitsilis. He's the Governor of the Independent Authority for Public Revenue and the lady of our Parea in Greek, Mrs. Aspa Palimeri. She is the country manager, Greece, Cyprus, and Malta of MasterCard. Without further delay, let me give the floor to Minister Perakakis. Since we have 1 hour at our disposal, let's say we have 10 minutes each for initial introduction, and after we have time remaining for Q&As. Let's try to keep the time framework in order to have time later on for a short discussion. Minister, the floor is yours, please.
Thank you so much, dear friends. It's a great joy to be participating in this discussion, and needless to say, the topic is pertinent also in light of the RRF, of the new financial instruments that we have in our disposal in order to finance 100% of our digital strategy. And obviously, as especially people in this panel know, this strategy is very ambitious. First of all, the manifestation of the strategy is already obvious. What has happened in 2 years in Greece, and I'm citing a study made by Deloitte a couple of months back, which assessed all member states of the European Union on various dimensions of digital, showcased that especially in digital public services, Greece has managed to significantly cover the gap that existed up until previously, and we're running at a very significant pace towards A, convergence, but also B, innovation, meaning that we have started creating a full spectrum of platforms, a full spectrum of services which cover through digital instruments, through digital tools, the servicing citizens in the events of their lives through the government portal of Greece, gov.gr. This government portal started during the first lockdown in March 2020. It started by aggregating the pre-existing 501 services of the state, and now it has reached almost 1,300 services a year and a half later. This is by itself a manifestation of exponential progress. And also, if one could make a similar assessment of how many digital transactions we had in Greece in the last years, one simply needs to see and compare the numbers of 2018, where we had 8.8 million digital transactions, either through logins or interoperability, an overall estimate of this magnitude, which moved to 34 million in 2019, to 94 million in 2020, and to 150 million just in one semester in the first semester of 2021, thus expecting this year that we will surpass the scope of 300 million digital transactions. And those digital transactions are effectively the equivalent of physical visits not made. So this service, this change, this exponential leap is obviously a function of demand, because COVID-19 raised the full spectrum of issues, and the state had to ensure state continuity in the same manner that businesses ensure business continuity. But my claim would be that it's primarily a function of supply, of the supply of all these new services which we have managed to develop and create in a very dense period of time, attaining a momentum which will only continue in the months to come. And in reality, we plan to add new services every week in this new creation of gov.gr, which is the new facet of the state, focusing on the creation of corporations, the creation of creating their own company through the government portal, buying and selling property, fully developing digital health in Greece. Either we already launched an app which provides historical data on prescriptions in Greece and which will serve as the minimum viable product of overall electronic patient records, but also by launching telemedicine, preventive medicine, and the full spectrum of other activities per policy area using simple digital technologies, but which put a premium, which place a premium on putting citizens at the core of the proposition. Needless to say, of course, not all systems are small. Not all platforms are quick to launch. Not all solutions are nimble and swift in their development. For most of these platforms, we had managed to develop them because we built on the pre-existing systems that we had, but which we never managed to interoperate and connect between them. We tried and we have managed to a significant extent to create a new neural network of the state through these interoperabilities. Interoperability is the key tenet of simplifying processes, of developing a new proposition for the interaction between the citizen and the state. But it's not enough to just go on without obtaining new large-scale systems. And this is where the RRF is proving to be quite instrumental. We started developing our strategy before COVID in 2019, the Digital Bible, the Greek Digital Bible as we call it. And we wanted it to be a document which is not only strategic, we wanted it to be an action plan, a comprehensive action plan. And we thus started a very big dialogue with all other ministries in Greece in order to be able to have a sense of all the systems that they want, all the systems that they currently lack and what they would wish for moving forward, and all independent authorities, like the Revenue Authority or authorities in the social security sphere. What happened is that this list was very long. And what we required, what we needed in order to implement 100% of the strategy back in 2019 was that we needed to make very hard choices between the systems that we lacked, because we lacked many. Then, of course, the RRF came. And the RRF is an enabler for this strategy. We were ready to have a comprehensive proposal in place exactly because we had done this homework before. But post-RRF, those harsh choices didn't need to be made. What we had in place was a financial instrument, a mechanism, which would enable us to finance 100% of the strategy for the necessary systems. And not only that, to invest in a full spectrum of technologies and ICT tools, which not only act as a solution to the gap analysis of the past, i.e. trying to cover all the outstanding issues of the past, but also the necessary instruments in order to be able to follow what's happening internationally, what we call the fourth industrial revolution, invest in infrastructure and technologies which are quite significant in order for us not to miss the next train, as we would say in Greek, and to be able to be present and actually on the front lines of this significant change. So this is a game changer. We have the strategy, we have the right people to implement it. We know what we want to do with those significant financial capabilities that we have obtained, and we're ready to deliver. Both new services, both platforms and solutions, which every week, every month, we continue adding in the government platform, which is developed in an agile way, as programmers say, step by step, floor by floor, if we were to describe it as a building. But at the same time, to have medium-run solutions and large-scale systems, which will come and add up on top of what we're already building week by week. I have to say that I'm quite optimistic about the implementation of the strategy. In the last 2 years, we have managed to showcase that we're able to produce significant solutions to problems and actually innovate at the European level, either through the way in which we designed our auction on 5G or through the vaccination platform itself, which proved to be very innovative, not only at the European scale, but I would claim globally. Those are examples of the excellence of Greek programmers and of the capabilities of our domestic digital ecosystem. What we lacked, if I were to make an analogy from the technology sphere, we had the hardware for many years, but we lacked the software. So the software is now in place, and we're ready to deliver. Thank you very much again for the invitation, and I'm looking forward to your questions.
Thank you. Thank you very much. And there is one, let's say, very general but very basic question, Minister. So at the end of the day, what are the biggest benefits for the citizens and the companies if you fully digitize or digitalize, which is the right word, finally, the public sector?
I have to say that overall, and I said this in a speech before joining this panel in the Athens Democracy Forum, that perhaps we shouldn't have named this Ministry for Digital Governance, because the digital governance is the instrument, it's not the goal, it's the means. What we're trying to do, the key proposition, is what is described as service design. How do you simplify and change the way services are offered to citizens and corporations if you use simple digital technology? Sometimes technology as simple as an SMS, as we did in the e-prescription system, can be a game changer in the perception of citizens vis-a-vis how they interact with the state. So I have to say that the core proposition of using digital technologies is that first, there is a necessary condition. The necessary condition is that this whole discussion needs to be human-centric. You need to place the citizen at the core of the debate. You need to have human centricity, and you need to design services in a manner which maximizes utility for citizens. So if you do that, and you do it properly, then the benefits are huge. Digital technologies have the potential to reduce inequalities, increase transparency, help people with disabilities, help people who live abroad, and make each euro get its maximal economic effect in a society. It can do all those things at once if deployed properly. And what we're actually trying to do is this proper deployment.
And what about 5G? This expression came to our language now. Is 5G, let's say, the next big bet, not the next big step, big bet for the digital transformation of the country? And at the end of the day, what can society and the financial sector expect by the implementation of this technology?
5G is one of the big bets. It's the new neural network of the state, in a sense, because 5G is again an exponential technology. It's not another G. It's not like the transition from 2G to 3G to 4G. It's exponential, and this means that this new telecommunications capability that we have in our hands has the potential for the market, not actually for us, but in reality, it's for the inventor, the entrepreneur, the private sector to develop all these new ideas, given this new telecommunications infrastructure, which enables them, which acts as a catalyst for the creation of these ideas. So on 5G, what we tried to do was to have a very good and quick auction, an auction which proved to be very incentivizing the telecommunications providers to roll out the network as quickly as possible in Greece. This is happening. At the same time, we reserved a portion of the spectrum for free access to startups and research centers and universities for the development of those services and new products. And we created a fund which will invest in those companies that will be created. So in reality, what we try to do is to spare innovation in the 5G sphere, because for us, it's indeed one of these, I would say, emerging opportunities which we really need to garner.
Mm-hmm. And a last question before leaving you, since your program today it's very full, let's say. Everybody says that you're very successful. Does this stress you out? Because it's another thing to make success and another thing keep on doing success, especially in this country.
I have to say that as a team here, we have a mentality, even though we act within the context of a political system, and I'm a politician myself, we act and we try to think as much as we can as programmers, as people who develop these applications, because many people in my team are programmers. So this means that we're continuously dissatisfied. We try continuously to improve what we're trying to do. We try to develop new services, and we try to make them better and better and better and better in the same manner as a startup, if you like, would work. And I guess, given the fact that we belong in this field, and we have had, both myself and my team in the ministry have worked in the IT sphere, we know that what has happened is significant, but we also know that what we need to cover is even more significant. So we have an acute sense of what remains to happen, and we're focusing on that rather than on what has happened.
Minister, thank you very much for having me here today, and also receive our congrats for your name day. Thank you. Thank you, Minister.
Thank you so much, and thank you for the wishes.
Okay, let me carry on with Europe. Let me go now to Brussels. The rain has started in Brussels, Mr. Skordas, as you already informed me. Mr. Thomas Skordas, he's the acting Deputy Director General for DG Connect of the European Commission. The floor is yours for 10 minutes, please.
Thank you. And actually, we have sun again, so that's
sun
why
again.
I'm
okay.
trying to hide myself between the shadow and the sunlight. So anyway, Mr. Minister, congratulations for your birthday. Dear Ms. Nicolciu, dear panelists, dear ladies and gentlemen, it's really a pleasure to participate in these very interesting times in this conference. Actually, as the Minister said, the pandemic has shown to us how essential digital is for the well-functioning of our economy, and our society, but at the same time, we have also seen that it has exacerbated the digital divides. So welcome really the increased prioritization of digital that was put on the spotlight by the Greek government, as well as the numerous initiatives that have been taking place in the very last years, such as the successful digital vaccination platform. I know that the minister is very proud of that, the use of the gov.gr for the digital public services, as he mentioned, that have been taken in digital since the outbreak of the pandemic. The Commission has announced that digital is just one of the 2 key priorities that we now have in the Union for the next 10 years. Actually, we call it even the digital decade, and the 2 priorities, so it's digital in combination with green, or green and digital, or green combined with digital, if you wish. So the Commission has really put in place some ambitious programs and policies for strengthening the digital transformation in all its aspects, from technology development to infrastructure deployment and to skills, while at the same time we're respecting fundamental digital principles that would really guide the digital development policy in the Union and the member states during this digital decade. As the Commission President, Ms. von der Leyen, said it in her annual landmark speech on the State of the Union 10 days ago, digital is the make or break issue that we are facing now in front of us. And I think the member states, all of us, and the member states in particular, understand that also very, very well. Now, how are we going to realize this digital decade, this digital, I would say, priority that we have now in our agendas? We have 2 main instruments, if I may express myself, for developing digital in the Union in the next 10 years. The first of those is the Digital Policy Program for the Digital Decade that we proposed from the Commission side just 10 days ago, and which is the instrument which will help all of us, the Union, the member states, to implement our digital strategy from now to 2030. So this program sets out the vision for the development of the digital decade in Europe, from tech leadership and sustainability to the respect of our human values and our sovereignty in an open and interconnected world. The program actually sets out 12 concrete targets to reach by the Union and all the member states around, I would say, 4 cardinal points. You can imagine it's a digital compass, as we say. So we have skills, secure infrastructures, the transformation of business, and the digitalization of public services. These 12 key performance indicators are simple, that we have chosen, but also ambitious. I will give you a few examples. Let's take the skills. Today we have 8 million of ICT specialists. We need much more, and we set the target to have 20 million of ICT specialists all over the Union. Another target on infrastructures. So the target here that we set, for example, in the connectivity is that all European households are covered by gigabit networks, and all populated areas are covered by 5G networks by the 2030. Let's take another one on the business side. Here we are very ambitious also, because we say that 75% of all the Union's companies, be it large companies or SMEs, must have taken up digital technologies such as the big data, such as the cloud computing services or artificial intelligence. Today, we are barely at 30%. And let's take the fourth one, which is in public services. By 2030, we said that 100 online, everything has to be online, accessible, and available to all citizens and businesses. I mean, online accessible provision of key public services. And we heard from the minister that already he has 1,300 services, but much more is still to come. So these are the services actually and the targets, sorry, that we have to measure on an annual basis, both at EU level and at national level. At the same time, we should not forget that it's not just about having targets for the next 10 years that do not put the citizens at the forefront. The minister said an anthropocentric vision for the future. So this is why the program that we have proposed includes also a set of digital principles and rights in a solemn interinstitutional declaration. This principle should guide really the policymakers when making decisions on digitalization and inform users about what are their rights in this digital environment. So the aim is really to ensure that everyone can enjoy the benefits of digital opportunities, such as universal access to the internet, such as algorithms, in particular artificial intelligence algorithms that respect people, and of course, a secure and trusted online environment. So the program also introduces, just to give you the full picture, that it's not only about targets, it's not only about the digital principles for our people, but it's also about setting in place a sort of comprehensive governance framework to ensure that all member states can advance together in these digital targets. So we will have a cooperation, a very strong cooperation with all member states to discuss our collective progress, to take joint actions, and to invest in large-scale projects with other private and public actors. We will annually report to the European Parliament and the Council about the state of the digital decade, on progress we make, and then we will signal through a sort of a traffic light system. So you see, we try to make things relatively simple. So if we are in the red part, in the yellow part, or in the green part, and then take corrective actions as needed. Mm-hmm. So as I said, the member states will be very, very closely associated with all this exercise. And one of the things that we will be asking them to develop very, very quickly is their strategic roadmaps and their programs and policies that they would need to put in place to be able to achieve the targets that I mentioned. At the same time, we will announce that we are putting in place a number of multi-country projects for developing ambitious digital technologies and infrastructures. So the idea is that we will bring around those multi-country projects, both public and private partners, so that they can all co-invest and deploy very, very ambitious technologies, very ambitious infrastructures for the sake of our society and our economy. I can give you a few examples. Mm-hmm. We want to develop, for example, high-tech partnerships for digital skills, just to focus on the skills part. We want to deploy pan-European 5G corridors, so to be able to prepare, for example, for the intelligent cars of the future that would be self-driving in our highways. We want to prepare, and we have already announced it, to have digital innovation hubs for all our companies, and Greece has very bold plans also on that. They have already announced a number of these digital hubs in a number of areas that are critical for the industries in Greece. We will announce, or we are working already on a pan-European low-power processor. Or when we come to governments, not just to develop the national government plans and make everything digital, but also to interconnect the different public administrations in the Union. Now, the second instrument that we have for being able to reach the targets of our digital decade is the Recovery and Resilience Facility, the famous recovery plans that the minister mentioned also. So you probably know now that this is more than a 700 billion package for the period 2021 to 2026. And where we will hope that at least 20% of this package will be spent on the digital priorities, be it in the form of grants or in the form of loans. So far, we have already approved 19 of these national plans. So we have seen that the member states whose plans have been approved have put digital very high in the agenda, not just at the bar of 20%, but we are in average around 27%. And this already represents more than 110 billion euros to spend on digital by these 19 member states. And we are still expecting the other 8 member states to come. So I would say that here there is huge hope that with all this money, we will really be able to reach the targets for this digital decade. Now, I'm really proud for my country because Greece is one of the first countries that have submitted the RRF plans, and these have been approved. So the plan is a 30 billion euro plan, of which 7 billion is spent on digital. And the minister knows very, very well with his services that we work closely together to be able to put in place, I would say, ambitious targets, ambitious projects to be able to accompany actually his plans and his vision and the government's vision, I would say Greece's vision about how digital should shape our economy and our society in the country. So, and this concerns certainly connectivity, certainly skills, certainly the transformation of our companies to digital, and finally, without forgetting, the modernization of public administration, which, as we all know when we live in Greece, it's one of the, I would say, the big passions that we have in the country. And despite several efforts, still, I mean, we are somehow suffering still from the lack of sufficient digitalization in a number of areas. And this is where the minister is coming with the strategy he set and with the RRF plans to be able to cover also these kinds of activities. So you may here notice that there is a direct correspondence between the digital decade per program and the targets we set there, and the four areas, cardinal points, as I mentioned, and the RRF plans. So you can see now how the one will complement the other to be able to move together, all together, to reach our ambitious plans. So I really hope that my country will use for best this RRF facility as a game changer, as the minister said, for Greece, and as a catalyst for a digital transition with lasting benefits for the economy and for our people. Thank you.
Thank you. Let me not open yet the discussion, just a question to elaborate some things that already mentioned. What about the monitoring? Because the big question is how the European Union can really monitor all this procedure. Because in the past, you know, we had bad examples of how this money have been used.
Well, the monitoring, you mean the monitoring of both the digital decade and the RRF, or just the RRF? Because both are crucial.
Mainly for the digital decade.
Okay, so the monitoring...
This is the topic of our discussion tonight.
Yes, yes, absolutely. So the idea is that if we set ambitious targets, first of all, we need to agree with them, with the Council and the Parliament, before they become the targets for the Union. So this is the work to come. And then, as I said before, we will have a number of these targets will be measured via the same mechanisms that we use right now to measure the progress of every country on digital. This is we call the DESI mechanism. So we'll extend this mechanism to include these 12 new targets. And we have, I mean, from now to the 2030 that I provided, you know, we have projected targets that we need to reach on an annual basis, which will be somehow exactly those targets that we'll have to meet at the level of every country and at the level of the Union to be able to monitor well what's going on. So we'll sit down with the member states, we'll agree on those, we'll provide the monitoring mechanism. Don't ask me about how we punish member states. We don't want to punish nobody right now. What we want is to make sure that we have common targets to reach, that there is in place nice policies and strategies that would make it happen. And then we'll sit down together. So every now and then to see where we are, monitor progress, and if necessary, why not? We will recommend that some countries may have to speed up some of the activities they have. And in some cases, we may even come to a point where we'll have to take some corrective activities, I mean, even at the Union level. So all this part is of what we want to put in place. But as I said, I prefer to talk about a cooperative strategy and process rather than punishments and all the other things that you know.
Thank you. Thank you so much. Let me carry on with Governor Fitzliz. You have also a very difficult task because the word public revenue for Greeks, it's a difficult task. And if we combine this with digital, is a very, very difficult task, Governor. The floor is yours.
Thank you very much. Good afternoon, everybody. Thank you for the invitation and the opportunity that is given to us to discuss about our digital strategy, especially through the RRF. As you rightly point out, if anything, a tax administration in public revenue needs to be digital. And it has been digital even, before the RRF. We were probably the most digital public administration organization. And of course, inevitably, because so many things depend upon collection of taxes, but also a proper registry concerning what who are the citizens, who are the businesses functioning in Greece, what is the revenue. So many things rely upon a healthy, sound data warehouse registry. And what Minister Pierakakis talked about, interoperability. A lot of this work actually comes from data collected by the Revenue Authority. So modernization of the digital landscape was in the core of our strategy since 2016. Our strategic plan for the years 2020-2024 it's in the center of our, I would say, our strategy. Our blueprint reform, which we have been working on since 2018 with a view and an ambition to create a fully digital environment for taxpayers and businesses, has been there since the past 5 years. And also this has given us, I would say, the opportunity to work on very ambitious and very big and very ambitious projects, such as, for example, My Data, so the digital bookkeeping and electronic invoicing, which has been operating in a pilot phase since almost a year now, and it's entering its new compulsory phase in the next months, in a few, on October 1st for some businesses and November 1st for the rest of the businesses. But that said, we have in front of us new enabling factors. I would name three. The first one, of course, is the pandemic itself. It has forced us to accelerate the effort. It was a catalyst in revisiting our approach on how we provide and why we provide digital services. For what concerns our authority, we had to develop a very big platform in order to provide financial services to businesses. My Business Support was the name. All the financial support payments to businesses went through that platform. Almost 9 billion euros went through that, and that created an architectural legacy for us that we used also for other citizens and businesses in need. The new ROE platform for our citizens that were their houses were destroyed by the fires or now by the recent earthquakes will pass through that platform. So new, let's just say, platforms and new digital solutions, end-to-end digital for citizens and businesses that are in need. The second factor is the new mentality that the Ministry of Digital Governance brought to this discussion. And it's not just the new concept of applications and the new tangible results that citizens saw through the work of the Ministry of Digital Governance. It's also what is happening behind the scenes, and it's the investment not only on application but also on infrastructure, and we consider this crucial for the sustainability of digitalization. And there we had a huge progress thanks to the Ministry of Digital Governance. And the third factor, of course, is the RRF, is the Recovery and Resilience Fund, because as very rightly Minister Pierakakis pointed out, it freed us from the need to constrain our requests for digitalization, our funding for digitalization. So I will briefly go through what, into the target areas of our digitalization. 4 big target areas. The first one is the replacement of core systems. We need to renew our obsolete infrastructure and expand the functionality of our service provision. We cannot sustainably provide much better services with old core systems. So RRF includes the new taxes, new core systems for customs and chemical labs, new core systems for human resources and financial services systems. The other big area, second big area, is the automation of office and work processes. We need to provide the modernized, secure, and efficient working environment. So we have projects that include digital archiving, document and content management systems, computer equipment. We are very proud that through the RF, we managed already to procure 5,000 laptops, new laptops for our tax offices and customs offices around the country. Business continuity solutions and IT service management tools. Third big area, the digitalization of audits and controls. Living in a world that is becoming more and more data-driven, we need to have strong data analytics tools and skills, of course. So business intelligence and artificial intelligence projects are within the RF for the Revenue Authority. A subject that is well known and has been discussed for quite a while in the press, the next generation online cash registers, which will be, will have an operability with POS systems. A very ambitious project on surveillance of commercial vehicles and containers once they enter the Greek territory. And an enterprise risk management system, including data security. A fourth area is upgrading taxpayer services. And there, what we want to achieve is accessibility to rules and to rules of the tax procedures and building trust with taxpayers. So we're working on upgrading our taxpayers' call centers, and also where there is a very big project on codification of primary and secondary tax legislation. What are the objectives? Tax certainty, and of course, attract investments. This is why we are looking for full end-to-end digital services for businesses and citizens. This is why we work in order to simplify procedures, in order to enhance business ventures. And we're working on immediate response to legal changes and urgent needs. But also, and foremost, I would say, user-friendly services that will enhance voluntary compliance to helping taxpayers knowing their obligations, better knowing their obligations, having better access to how to fulfill their obligations, optimizing service delivery channels such as web, mail, and telephone, and at the end, building a relationship of trust between the authority and the taxpayers. In a nutshell, we cannot make payment of taxes more pleasant. We're working on making it easier for everyone. Thank you very much.
Thank you. Thank you. Easier. This is the big bet, let's say.
Exactly.
Let me carry on now with MasterCard. Let me carry on with the lady of our company. Please, the floor is yours.
Thank you, first of all, for inviting me also in the panel to discuss the digitization of Greece, and think it's actually discussing the future more or less. So I'm representing a technology company that is mostly known for its payment solutions. So this is what I'm going to talk about, and actually put on the table the fact that electronic payments can foster digitization. And what we've seen in Greece the last few years is a very good example of this, let's say. So there's a clear linkage between the digitization of payments and the digitization of the government. By extension, of course, we're talking about the economy and the society. And there are two main reasons for this. The first one is a very simple one. It's, payments we do every day. So it is all about the habit. On the one hand, digital payments contribute to the development of a digital culture. So we expect that people that are familiar with the idea that they can carry out a commercial transaction electronically are much more likely to be open to the idea of carrying out an interaction with the government electronically. I think the 5 years that we've been through a huge change in electronic transactions actually helped a lot the consumers and the citizens to use gov.gr. And although this holds true for all types of payments, the card payments specifically are in an advantageous position because of their strong end user facing part, and also because of the infrastructure that is needed. So the good news here is that thanks to a solid and very broad card payment ecosystem that we have in Greece and the introduction on the part of the government of measures promoting e-payments, we are extremely well positioned to realize all the full benefits of digital payments. Keep in mind that in Greece, we have one of the highest terminalization rates of Europe. So we're talking about more than 700,000 POS terminals in the market. And this, along with the good measures that were taken promoting in payments and that were legislated in the past 5 years, they have resulted in a rapid expansion of card payments in our country. And this led to a very positive impact on tax revenues. So at least 17% of the annual growth in VAT revenues in 2019 was the result of the expansion of card payments. It also increased materially the penetration of cards in personal consumption. We are still below the EU average. Nevertheless, we really have seen a big growth in the last few years. Now, governments, on the other hand, are the largest users of the country's payment system. They set the tone. The digitization of payments to public entities is a factor that favors the growth of e-payments. They help the culture to spread and convey the message that digital payments and interactions are possible in every aspect of our life. And there is an extra advantage specific to cards versus other means of payment. You know, when we try to shift cash payments into accounts is, of course, a very good first step. But as long as payments are cashed out immediately upon receipt, governments are not reaping out all the benefits they could from these digital payments. The possibility of applying spending restrictions, especially of disabling, let's say, or limiting cash withdrawals, is a very handy functionality that only cards can offer. And the activation of these restrictions dramatically increases the chances that the journey remains digital along the way, with all the benefits that this brings, both for the digital inclusion, but also the securing the tax revenues. Now, we've seen also that the possibility to apply spending restrictions has been the reason why card payments are the preferred means, if you want, at the financial inclusion level. And when I talk about financial inclusion, many people, wonder why I'm talking about that in Greece, because we all have in mind that, the unbanked ratio is quite low. Nevertheless, these days it's extremely important, and look at all the widespread economic turmoil that was caused by COVID-19, but also the wildfires, the floods that affected millions of people around the globe over the past 1.5 years. Governments, for all of those, were required to actually distribute big amounts of money in social protection payments and do this very rapidly and efficiently. And in those cases, even more, it is important for governments to secure that the respective amounts are spent in white economy, to ensure that the sustainability of the support granted and the help in a fair way to all the businesses. So for the government, it is possible to support specific sectors also if they want. And we have an excellent example of exactly that in Greece. The Freedom Pass that was launched by the government in July actually used the digital card as a preferred instrument that allowed the government to support the travel and entertainment sector, a sector among the ones that was most heavily afflicted. And it reduced, of course, the card payments to youngsters. So after the successful pilot, we think it's really the time for the government to proceed with the migration of governmental disbursements, including unemployment, social welfare benefits, extraordinary aids. All of those can be transferred to prepaid cards. And the expansion of the list of merchants that are obliged to accept card payments so that the entire B2C market is covered, a discussion that is open on the table for quite some time now, would be a further important step underpinning the digitization effort. Now, the second reason, so the first reason, as I said, is habit. The second reason is actually probably less obvious, but quite as important. Digital payments are actually providing us with extremely useful data. as people and organizations are changing the ways that they're paying and they're increasingly relying on non-cash methods, they generate data. And this gives the governments the ability to actually pave new paths in the policy-making level. In the very recent years, there has been a developing awareness that data can decrease vulnerability about the best game plan in policy design and improve the government's ability to manage risk and produce results. Instead of really shooting in the dark, increasingly more governments rely on data to spot needs, draw more effective policies, and measure their results. Governments can also use the data to identify and address issues in their existing services to the citizens so that they can actually evolve them and improve them to cover the changing needs of their people. Even more importantly, data can enable what we call anticipatory governance, a term that actually describes the effort to consider the future in order to inform policy decisions today. So these are actually the two reasons why digitization of payments can help in the digitization of the economy and the society. Now, being in the middle of the payments, of the payments ecosystem, MasterCard sits on really a breadth of anonymized, aggregate, proprietary data that can help policymakers answer key questions, especially those questions that have to do with where people spend their money, what are their spending behaviors. We have realized that it is worth to actually use that data, not only for our own benefit, but actually to share and generate public value. So ever since the outset of the pandemic, we have been compiling data about the course of spending in Greece. We organized them into tailor-made reports that facilitate the drawing of conclusions and shared those with the Greek government. We continue doing that. Also, the past few years, we decided to actually combine our data with data from third parties to give a more comprehensive, if you want, view in specific sectors. This is exactly the approach we're following in the field of tourism, where the data we consolidate can help tourism decision makers understand their audiences, draw more effective marketing strategies, use their budget more efficiently, and make informed decisions. Such data has also the advantage to provide early information about audiences that are eager and able to travel. This way, they help decision makers draw their strategy for the day after, exactly what we talked about before, this concept of anticipatory governance. This is exactly what we've done as MasterCard as part of our partnership with the Greek National Tourism Organization, with which we have worked on 3 joint campaigns through the last 2 years that leverage the data featured in our platform to promote Greece as a destination to the affluent travelers of specific target markets. These campaigns show the power and importance of data in situations where policymakers are called to navigate uncharted waters. We have never seen before the COVID situation and what it meant for tourists. Based on data that were, among many more, monitoring flight capacity, searches on the part of potential travelers, their perception of Greece at any given time, and were able to identify trends to understand the audiences that were not necessarily a priority for Greece in the pre-COVID normal, if you want, times, and address them using the right messages and vehicles. So in conclusion, 2 very big things about payments, habit and data, they can really help accelerate the effort to digitize Greece. Thank you.
Thank you very much. We have, let's say, 8 minutes left, so we don't have much time for a real discussion. I would like to start with you and asking you the following. I believe that all the people participating in this discussion realize the power of e-payments in terms of transparency, improvement of tax revenues, and advancement of financial inclusion. However, you have to admit that the further digitization of government and the economy bears a risk of the gap between the digital savvy and the technical challenge to broaden. What is your take on that?
You're very correct, and actually, I think this is a big debate. There are many that actually discussing that increase of digitization can actually help a lot in terms of financial inclusion. The truth of the matter, though, is that if we don't do it properly, it may actually leave more people behind. It's different groups of people. We may talk about the elderly that have a greater difficulty, let's say, to deal with the digital literacy. So it's extremely important what we do on the domain of actually educating. There should be specific initiatives enhancing financial literacy and promoting digital literacy and inclusion, both of the beneficiaries or consumers, but also of the business owners. And actually, with regards to the latter, we have put forth a very specific, let's say, initiative. We call it Digital Doors, which aims exactly to help SMEs adapt to the new reality. And as part of this initiative, we've launched a series of specific learning courses that support SMEs' efforts to enhance their digital skills. We actually did this educational program in partnership with the educational arm of the ISEVE, because we believe that we needed an expert. And if you want, I think this is also a big lesson that can help us going forward. We have to partner. Each one of us can bring different things on the table. Partner between the private sector, but also between the private and the public sector, and create initiatives of this type that will ensure that recipients of digital payments become familiar with the respective systems, understand how they work and trust them, and ultimately they will allow for the cash out constraint to gradually lessen and secure that the chasm, if you want, between the tech savvy and the digital struggles won't widen.
Thank you. Thank you very much. Since we have 4 minutes left, I would like to split this 2 minutes for each of the gentlemen. Let me start with Mr. Pitsilis. A last word, a last comment.
From my side, last comment from my side, we are committed to change. This is how I would describe how we have been working so far in the authority. And we're very proud every time we are in the position to present a new digital service. Only a few days ago, we presented our new platform, IOBE, which is actually the new interface with our taxpayers. And it's not only new in terms of user experience, it's also new in terms of new services. 250 procedures which needed a physical presence in the tax office now can be completed through the website. So it's not just, it's combining digital ingenuity with understanding the needs of taxpayers. That's what we are working on. That's what we try to succeed, and we are very happy every time we make this happen.
Thank you very much, Mr. Skordas. Since you have the sun by your window, even if it is raining in Brussels, do you have an optimistic view at the end of the day?
With the sun there, it's difficult not to be optimistic. And actually, I hear many times, many people saying, well, Europe is really lagging behind the States, lagging behind China. And so what do you do about that? I think the reply can be different. Look, how many digital certificates exist in China or in the US? So we did it in Europe in record time. It took us 3 months to do it. All member states have joined up. And this is how the economy has started opening up. So I'm really optimistic because now we have the instruments to put in place. The money is there, you heard. So, and we need really now to use them correctly and cooperate and coordinate our activities to make sure that we reach our targets. And there, nobody would be anymore saying to us, you are catching up. But I'm pretty sure that if we do that, we will be there where nobody can be. So, and this is not only in the digital government, but it's in all sectors of the digital and would really impact all sectors of society. So I'm very optimistic and I'm pretty sure we will make it happen.
Thank you very much. Thank you all for having you here with us tonight. It was a really very interesting discussion. I would also like to thank the organizers, the Office of the European Commission here in Athens, and also IOBE, and especially Professor Vetas for this very interesting conference. Thank you all. I give the floor to the next panel and the next moderator. Bye-bye.
Ladies and gentlemen, good evening. I have the honor to coordinate that round table with the title Moving Towards the Implementation of RRP, the Resilience and Recovery Plan. And the panelists on this session are Mr. Nikos Matzoufas, who is the governor of the RRF agency in Greece, Mario Tavares da Silva, who is the vice president of the RRF task force in Portugal, Mrs. Julia Litvai, who is the head of unit in Directorate General for Economic and Financial Affairs in the European Commission, Mr. Dimitris Politis, who is the CEO of the Hellenic Republic Asset Development Fund, and Mr. Dimitris Papageorgiou, who is the mayor of Trikala and the head of KEDE, the Union of the Municipalities and Cities in Greece. I'll give the floor to Mr. Matzoufas, who is in charge of the organization that has to move the things from paper to live. Mr. Matzoufas, you have the floor.
Thank you very much, Mr. Terloglos. Thank you very much for the invitation, and I welcome all the participants in this session. Indeed, the Recovery and Resilience Facility is a new facility that has been developed under the decisions of the prime ministers of all European countries of the European Union, and now it has become a reality. Something that cannot be considered, now it is a fact, but at a point there had been a lot of work to make this happen. So if I may start to describe in a few words the process so far, and then moving to the process of the implementation. So Greece was one of the first countries that actually prepared their Recovery and Resilience Fund. The same was valid for Portugal, and it's good that the two southern countries are in the forefront in that respect. So that was a very interesting period, because we had a lot of discussions and exchanges with the European Commission in order to finalize our plan. And this was a very, very interesting exercise, apart from the fact that it became an approved plan, because all of us actually had to decide on the priorities and on the projects and programs that can be implemented. Because one key factor on this facility is that it needs to be implemented in time and in very specific time frame that all we need to follow. So that was an exercise that took some months. We had, if I recall well, Julia, more than 100 meetings among ourselves. And we are very happy that it is a plan that has been endorsed by the European Commission and the ECOFIN, a plan that we strongly believe that is an implementable plan. Now, what are the main pillars of our plan? One, if I may say, novelty of the Greek plan is that Greece has requested the full amount of the loans that was entitled. So in general, we have 17.8 billion in terms of grants in all areas of the economy. And we have decided to ask for the 12.7 billion that was the amount that we could ask as a loan facility. The loan facility, the novelty is that we will channel it to the private economy. So we want, in that sense, to boost the private investment, the private sector and private investments by offering low liquidity and lower interest rate. In that regard, we have already signed memorandum of understanding with the European Investment Bank and EBRD, which will be two of the pillars, two of the channels that will be used to channel this funding to the enterprises, and of course the commercial banks. So within the next, really the few days, it could be even tomorrow, all these will start to be implemented. So we are about to sign the operational agreement with the European Investment Bank that has approved at the board level our agreement. The same was valid for Italy. So Greece and Italy are the two first countries that under their RRP program will utilize the experience and the funding also of the European Investment Bank. And we will also launch the call for the commercial banks. Now, the novelty here is that we are to offer 30 to 50% of a project cost, providing this lower interest rate, and the rest will be covered from the banks and equity side from the investors. And it will be on a pari passu basis. Now, one could say that we might say that some more generous support is needed. But do consider the fact that these 12.7 billion need to be repaid. So we are getting from the European Commission that has already started the borrowing, this very low interest rate that is passed to us. This low interest rate will be passed to the private economy, but we want viable and solid investments that at the end of the day will be will repay the loan facility so that we are also in a position to repay our obligations to the European Commission. In my view, this is one of the big novelties of the Greek plan, because for the first time, a quite big amount of money with lower interest rate that would make investments in Greece more favorable compared, since in Greek reality, the interest rates the enterprises are facing is much higher than the average European. So it certainly will be a key pillar that is addressed to viable private investments. Now, in regards to the grants, there has been a strong emphasis on climate change targets and digitalization. They cover more than 57% of the total plan. And just to pick a few projects there, by the way, it covers almost any sector of the Greek economy, from the renovation of hospitals to upskilling, many infrastructure for the local administration and municipalities. But let me pick two projects that are of particular importance. One is the local urban plans. Through this facility, we will actually develop more than 700 local urban development plans. And Mr. Papasteriou, I'm sure he understands the necessity of this. In many areas of Greece, we do not have recent urban development plans, and this has this brings many uncertainties in terms of what can be built where. So this is one very big program that at the end will give a very clear framework of what can be developed, private or public, in most of the Greek territory. And another very big program that will be utilized is upskilling and reskilling, with special emphasis on green skills and digital skills. You know that we want at the same time to boost the private economy, and I'm sure that many enterprises do face the fact that there are, in some cases, a lack of people that have the necessary skills that are needed in this kind of economy. So we will put a very big plan on the upskilling on digital and green skills, but I'm sure that will develop a new era and a new culture in Greece in terms of the skills that all the workers and individuals have, and be able to adapt to the needs of the economy. Finally, and we can discuss further during this session, in terms of the implementation. At the moment, we are developing our control and audit scheme. We need to balance in two things: to move fast, but at the same time to move in a way that there is no issue in regards to legality, in regards to expenses that are not properly managed, etc. That was one of the reasons that their facility has been built at the Ministry of Finance. So at the same time, we are working with all the necessary details among the public administration, so to make this efficient and at the same time, as I said again, very safe in regards to proper management and expensing of all these funds. Once again, many thanks to the European Commission, with which we have a very good cooperation, and I'm sure this will be an ongoing process, especially to Julia and the whole team, that for many months we were meeting, discussing explaining. I think we have a very good plan. We have made all the necessary work to make it implementable. A lot of work ahead of us, but we are really determined to make it happen.
Thank you very much, Nikos Matzoufas, for your opening remarks. I'm passing now the floor to Mario Tavares Silva for the Portuguese experience.
Thank you. I want to share the screen if it's possible. First, okay.
Yes.
First of all, good afternoon. And on behalf of the President of Task Force Recovering Portugal, I would like to thanks for this opportunity to share our experience in Portugal and to share all the things we are making at this moment. So, I prepared a presentation, a brief presentation, and I try to accomplish the 10 minutes I have to explain the main issues we have faced in this moment in the setup of the task force, and of course in the development of the plan and the execution of the plan. In Portugal, we have, considering the RRF will be implemented under direct management with member states, Portugal has created a governance model with 4 levels of coordination: a level of political coordination, a level of monitoring that is supposed to follow up the implementation of the plan, a technical and the level management task force recovering Portugal, and an audit and control level with an audit and control commission. We also have some main principles that guide our work, and we are particularly moving in these issues because it's very important to fulfill the targets and the milestones without any problems concerning with double funding, fraud, corruption, and of course conflict of interest. For instance, we have the main principle that is concerned about centralization of management and decentralization of execution. We have so transparency and accountability, participation. There is another important principle that its result focus on and its execution. Segregation of duties, it's a very important principle that we are focusing. Simplification and prevention and management of conflict of interests, of course. For instance, to have an idea, what are the main tasks that are supposed to be accomplished by Task Force Recovering Portugal? Negotiate and monitor the execution of the Portuguese RRP, monitoring the implementation of the Portuguese RRP reforms and investments, contracting with the respective beneficiaries of the funds. There is all the governance model supported by the contract. All the governance model is supposed to be supported by the contract that is established between Recovering Portugal and the beneficiaries. And of course, we have also another tasks implementing a management and internal control system. This is a very important issue for us. Adopting effective and proportionate anti-fraud measures. Of course, this is implied that we identify risks, specific risks, because RRP is not a conventional plan in this way of view. So we have to think bigger than we did before. To summarize the main ideas, this type of plan, this RRP, is a collective project because it implies all the stakeholders to get the best of all the stakeholders. Recovering Portugal, centralized management and decentralized execution. But this is this is the way that we in Portugal achieve to relate with the beneficiaries. We have three types, for you understand the idea. We have three types of beneficiaries: direct beneficiaries, intermediated beneficiaries, and final beneficiaries. Recovering Portugal with these tasks only contracts with direct beneficiaries and intermediated beneficiaries. The difference is simple. Direct beneficiaries, it's supposed to implementing directly the investment or the reform, and intermediated beneficiaries, it's supposed to have a second step. It has to, the entity is always a public entity, has to make the contract with the final beneficiary that is supposed to execute and to implementing the reinvestment or the reform. That's the main difference between direct beneficiaries and intermediated beneficiaries. The big idea is recovering Portugal contract with direct and intermediate beneficiaries, and of course at the end these intermediated beneficiaries could make the same contract, or could make another contract with companies, for instance, private sector, of course, enterprises, and municipalities, families, among others, of course. For you have an idea what is the main components of the RRP, the Portuguese RRP. We have the big amounts here. Resilience have a lot of the total amount, which owns 11 Bs of the total of the RRP. And climate transition with some important amounts for sustainable mobility, sustainable economy, and of course digital transition for enterprises, economic justice and business, digital public administration, and another of course sectors that are very interesting in this recovery from the pandemic. You have also here the amounts. You can of course consult after of this presentation. Climate transition. See the carbonization of industry, energy efficiency in buildings, hydrogen and renewable sustainable mobility. And of course, that's the presentation for you that I bring today. The important thing that I want to pass to you and share, of course, I remember the statement of our Commissioner von der Leyen when she said, with the next generation European Union, we have the historic opportunity to provide the public funding, but we have to make the right choice, and we have to think bigger than we did before. That's the main point. We have to think bigger than before. It's the idea of we have not to cause situations of corruption, double funding, and another type of issues that are very dangerous for the society and for this project that is a collective project, as I said. Thank you very much for sharing this with me. Thank you very much.
Thank you, Mr. Tavares da Silva, for your really interesting presentation. I pass the floor now to Mrs. Julia Ledvai. I'm passing the floor to Mrs. Julia Ledvai with some remarks I have from the market here, the marketplace here, where the main thing about the implementation of that plan is how the money is going to trickle down to the market, which is always a problem when you have to implement big European programs, not only in Greece where the companies are too small, and of course there are some objective difficulties, but also in other places where the companies are bigger.
Yeah, thank you very much. An interesting point that I will try to add to my speech, which was not addressing this question. First of all, let me thank all my colleagues in Athens and the IOBE team for the organization of this conference, which involved a lot of work and flexibility on their side. So many thanks to them. And I'm very happy to participate, of course, in this panel, which I think is discussing the key element of the future of this plan, which, as you rightly said, Mr. Taloglu, has to be brought from paper to reality. Now, first, let me start by mentioning the very successful preparation of the plan that Nikos also mentioned, for which a very strong central coordination mechanism was put in place by the Greek authorities. There was a high-level 5-member steering committee, and the agency, the RRF coordination agency under Nikos, was put in place. And this structure has worked very, very well. They managed to give a very strong central coordination for the selection of the plans within the country. And as Nikos mentioned, and thanks also from my side, we have established a very constructive and excellent cooperation with his teams as well. So this has worked very well and was much appreciated. Now, for the implementation, this has always been a difficulty in Greece. So on the positive side, let me mention a few things, which are that the government has recently adopted a number of measures which are expected to enhance the implementation of the plan. First of all, the recent setup of the strategic project pipeline, which will select the big public investment projects, and the project preparation facility, which will participate in the preparation of these projects. This setup is expected to improve and accelerate the planning and maturation of major investment projects. Another important point are the reforms that have been adopted in the past years to enhance administrative capacity. And the plan itself contains further measures in that respect that are expected to improve coordination and also strengthen technical services at municipalities. And finally, also the new public procurement framework that was recently adopted, and it's currently being finalized, is a very important step forward, as this has always been a stumbling block in the past, the lengthy public procurement procedures. And again, the plan itself contains measures to continue building on this and through the implementation of the national procurement strategy. Now, for the implementation of the plan on paper and almost in practice already, there will be a 4-level implementation and control structure, consisting of, again, of Nikos RRF coordination agency. And this is the first level. Then the line ministries who are responsible for implementation, the implementing bodies who will implement, and this is complemented by an audit structure under the supervision of the Financial Audit Committee, EDEL, and enhanced through independent certified auditors. And all this will be supported by a management information system, which I understand will be put up by the end of the year. Now, overall, this design and setup was considered adequate, also adequate to prevent and detect and correct corruption, fraud, and conflicts of interest in our assessment. Nevertheless, for the success of the plan, it will be essential to make sure that all this institutional framework works well in practice. And for this, I would like to stress 5 elements. The first point is that this is a big plan. It has been mentioned in previous sessions and also by Nikos. It consists of 175 measures, all of them with sub-measures, and there are 300 milestones and targets. There is a large number of ministries and implementing bodies involved, and there will also be a need to cooperate with the commission, between the Greek authorities and the Commission, obviously. So a very key point will be the strong coordination of the plan that we have seen during the preparation phase will also continue during the implementation phase. This will require clear responsibilities at the central level and seamless cooperation within the government. And obviously, we are standing ready for continued cooperation with the authorities. I think that this will be also very important, this ongoing consultation and coordination between the authorities and our teams. A second element is the implementation of the plan, which will, of course, crucially hinge on the administrative and implementation capacity of the various implementing bodies. And as I said, there will be a large number of those involved. So it will be very important that all these implementing bodies are appointed swiftly and very closely monitored then in the follow-up. The third element, I would say, will be a solid risk management strategy by the RRF coordination agency to early detect delays and deviations, possibly, and to effectively address those. And the fourth one is the stakeholders, who, in our view, should continue to be actively involved in the implementation of the plan, and they will also play an active part, and they should feel the ownership of the plan. And the last one, but not the least, is, of course, technical support that the Commission is continuously organizing and providing through our Directorate General Reform, who are also present in Athens, and my colleague Yannis Agianis will also talk in another session later. So I think these are the critical elements, and how the money will trickle down. I mean, the projects are selected, so this, I think now it's really the implementation of the plan that should ensure the trickling down of the money to the economy. So I think if it is implemented, then it will reach the real economy and it will have a very positive effect. Thanks.
Thank you very much, Mrs. Letvay, for your opening remarks. And I'm passing now the floor to Mr. Politis, who is the CEO of TAIPED, the Hellenic Republic Asset and Development Fund, for his remarks. Mr. Politis.
Thank you very much, Mr. Teloglu. Thank you for having me. Here at the fund, we're really excited to be part of this pan-European effort. And obviously, we are happy to support the Greek government in helping the economy to recover from the pandemic. We see ourselves as an important part in the big engine that has to be work properly and efficiently in order for this vast amount of money to trickle down to the economy. We have an substantial experience in effectively project management, and this is going to be our role. We are more flexible than the average governmental authority in managing projects of this size, in appointing advisors, in managing those advisors, at the end of the day, in maturing projects and preparing projects. And this is what the project preparation facility is at the end of the day. This new unit is going to be an independent unit from the more, let's say, established activity of the fund, which has been, if you like, the privatization of certain state assets. Is going to be a different business unit, having its own structure, completely separated for obvious cost controls and efficiency measures from the traditional activity. And we are in the process of setting it up, and we are marketing, if you like, this facility to the various project owners and project sponsors. We are now waiting eagerly for the governmental decision which projects are going to be handed over to TAIPED, to the PPF unit of TAIPED, so that we start we start the process of working. Obviously, all that is going to be done on a fully arm's length basis with the various project sponsors, being either ministries or local authorities or local entities, and which they have to decide which projects they would like to pass it over to us in order to help them mature at the end of the day, bring it to market. One important thing here is that we are not starting from square one. We don't go back to square one, if you like, because the project owners have the possibility to transfer also work that has been done to date on the various projects that are part of the RRF plan, so that we somehow inherit the work that has been done. We inherit advisors that they might have already appointed. So there is a continuation of the effort that has been taking place to date. As I said, we are thrilled and we are ready to move ahead as fast as possible. Always, our aim is to be fast, to be efficient, and not only absorbing the funds is a very big challenge. And at the end of the day, we're looking to have those funds have a multiplying effect for the local economy and the local society. Thank you, Mr. Taylor.
Thank you very much, Mr. Politis. I would like to pass the floor to our last panelist for his opening remarks, to Dimitris Papastergiou. I was talking to some colleague of yours in a favorite island of mine, which you may assume. And he was speaking to me about totally organizing the whole process of recycling, of water facilitating, of sewage, etc. And then I was asking him, how many engineers do you have in the islands? And he said, none. So what are you going to do about that?
Dear Tassos, dear friends, I have a proposal telling you in a while. But first of all, we have to admit that the recently COVID-19 pandemic has led to a certain degree of centralization of policy making on national level. Cities and urban areas have faced new forms of social and economic problems to which they had to react, and in many occasions without the necessary powers and financial resources. But which is the role of the local authorities to this pan-European effort for recovery? Cities and local areas should be the key players of the country's recovery. KEDE, our union of municipalities, had submitted its proposals from a very early stage. In national level, nowadays, the municipalities are in an extremely interesting point because there are three crucial financing tools that are going to finance the implementation of significant projects and interventions in order to contribute to the growth of the country and to upgrade the role of local authorities. I'm talking about the RRP, the new NSRF, as we say in Greece, and the Antonis Stritsis program, which can really change the growth pace. And after 10 years of economic crisis, but also pandemic, but in order not to lose a euro, basic condition for local and regional authorities is to carefully plan and distribute the projects so that there are no funding overlaps. We also have to pay attention how to spread the investments prospects throughout the country according to the advantages of each region, and not only in urban centers. How to multiply the available funding by leveraging private capitals. In fact, there can be no great and effective planning without the active participation of local societies as a key component of development planning, something that has already been mentioned by the European institutions. Now, it's crucial to make clear in which actions the municipalities can submit proposals, when, with what characteristics, and with what budget. The good news for today is that today, a few hours ago, we had the first meeting with the Ministry of Digital Governance about the RRP smart proposals for the 16 biggest municipalities of Greece. And the message is one, the challenge is great. Let's build our digital cities from scratch. In any case, a balanced regional development without the active participation of municipalities cannot exist. A necessary and sufficient condition for all the above to happen is the existence of technical assistance, as exactly Tassos told us a few minutes before, as close as possible to the municipalities. And indeed, as I said, we have in front of us 3 programs that all in some way have technical assistance. A good idea could be, and I'm answering to your question, to join together these possibilities and build strong local units of engineering, economists, and other required staff ready to assist the small, mainly municipalities, the municipalities of Finance and the maintenance municipalities for the next 2 years. The success of the mentioned 3 large development tools will be judged by something so simple, since external assistance through technical consultants sometimes remains a problem. Concluding, if we have the vision, for sure now we have the means. We have to trust the local authorities, but also the local authorities have to understand the important role it is called to play. This opportunity should not be missed because I'm afraid that there would be no other. Thank you so much.
Dimitris, for your remarks. I would like to pass a question to Nikos Matzoufas and Mario Tavares Silva on their thoughts about how reforms are going to be prioritized in being rolled out. Have you made any thoughts about that? What will be step A, step B, or do you think some things are going to take place in the same time? Because from my experience in Greece, you need to do some things first, let's say in the digital environment, in order to be in a place to roll out a reform, let's say, on another field.
Mario, you want first?
Nikos, you can talk first if you want.
Okay, good. Now, one of the things that is quite different from other financial instruments of the past is that RRF is a reform and investment program. This was set out from the beginning. This is part of the decision that has been made, that this is a program that should, at the same time with specific investments, include a number of reforms that will, at the end of the day, benefit the whole country, administration, and at the end of the day, citizens' life. So almost not in all, but in most of our programs, there is a reform attached to an investment. And there are many examples in that regard. To give you one, in the skilling and reskilling program, which will be a big program, there is a reform on actually how the reskilling and skilling is being performed in Greece. So to have a much better organized environment, and at the end of the day, to make sure that we are spending the money and all the people are getting the necessary knowledge that is needed. So in a whole, many reforms are in place. They have been discussed thoroughly with the European Commission that are part also of the requirements that we do have under the country-specific recommendations, but it's beyond that. So it's a fully endorsed reform and investment plan. This has also been approved at the Parliament level, but it's beyond that. At the end of the day, in order to actually receive the payments, we are at the same time binded to perform and execute all the reforms that we have put there. And one could say why there should be reforms that in Greece sometimes they are considered as something negative, because, okay, we think that might think that nothing needs to be changed, but it is a necessity. So in order to absorb this level of funding, we need to develop approximately 65 reforms that are part of the plan, and with specific milestones in regards to that. So it's not do it whatever you want or you wish. And fully endorsed by the current government, but I think more generally also by the society.
As far as concerned to Portugal, we have of course key structural reforms. Reforms, if you want to know the big idea, is to have structural reforms that are important in labor market, for instance, with a decent work agenda. For instance, education and skills are also important. Reform and for digital education, reform of cooperation between higher education and public administration and enterprises. But of course, we can forget that that RRP is built in a different way, because we have milestones and targets, and we have to fulfill to get the disbursement at the point. So, but we have, of course, some priority. Justice, public administration, for instance, modernization and simplification of public financial management, and of course, in social policies is also important for us. Housing and primary healthcare reform, and we can't forget, of course, the main reform on product market development and help enterprises through creation and development of national promotional bank, capitalization the enterprises. Of course, that is the main issues for us, of course. So this is the program, this is the main ideas, and of course we are committed to accomplish all the objectives and to get the fulfillment according to what we agree with the Commission, and to get of course to honor our commitment with the Commission and with all member states in Europe, of course.
Mrs. Ledvai has raised a point which is very traumatic for us Greeks. The point ownership of the program. So the ones you sit here around the table, except from Mr. Papasteriou, Dimitris, are not politicians. Politicians have to draw the majorities behind these projects. And I would like to pose a question to both Mr. Papasteriou and Mrs. Ledvai, hearing from two different sides the arguments about the involvement of the local communities. What will happen if local communities object the plan you have agreed on? They just drop it. You don't have the majority to realize it. What will happen then with the money?
Should I start or?
Please.
Okay, I must admit, so far, it seems that the ownership of this plan has been much higher than of all the programs that were ongoing since 2010. So there is a huge difference, a totally different world between economic adjustment programs on one side and the RRP. So I don't even want to put them in one sentence. So just to say, so far what we have observed was a very positive messages of ownership and a very positive reception of the plan. Also, I mean, of course, I'm in touch with the authorities, and that was also a problem in the past, ownership by the government itself. So now what we sense is really that the government would like to use the money, would like to use the opportunity to start Greece 2.0 and make the best use of the money. Now, if this changes, this will obviously hinder an implementation. And well, it's very easy. It's a performance-based tool, as Mr. Tavares Silva said it. milestones and targets have to be achieved to request disbursement. So if the Commission sees that these milestones and targets are not being satisfactorily fulfilled, then at some point the delays could build up such that not all the money can be disbursed. But I do hope that we will not get there. I see the authorities being very busy currently with the implementation of the first set of milestones. Obviously, in the beginning, it's mostly actually also to your question previously on sequencing of reforms and investments. Now, in the first sets of milestones and targets, we are talking more about reforms and possibly about launching of tenders for investment. So we will, I think that reforms will be implemented more in the beginning, especially the shorter ones, and then we will move more and more to investment implementation. So actually, I see positive signals, and I do hope that we don't need to talk about delays and losing disbursements.
I want to make the question a little bit more concrete. I'm not talking about the whole the whole plan. The plan consists of various actions and various projects. So it has a very strong local side. It can happen that on a certain local action, you don't have the majority of the local population behind you. What will happen with that?
Mr. Teloglu, may I put a point here because it's quite interesting. In regards to the local authorities, there are many programs that will be addressed to the local authorities that are willing to participate. To give you an example, and Mr. Papasiotris, you mentioned it earlier, on the digital transformation, we have a program for the digital cities. So this is a program with specific amount of money. Now, who will benefit from the program? There will be the municipalities and only that are dedicated on that particular plan. The others that are not will have their own budget from NSRF or Adonis Treaties or whatever. So in regards to the local authority, more generally, we are talking about programs that will be addressed to the ones that really want these programs to happen in their municipality. If they don't, there will be other municipalities.
It was exactly what Nikos said, the one that I want to mention, that we are not afraid of banning or dropping the program because we were a part of discussion from the very early, from August 2020, 2019. But we are really anxious about speeding up, about finding the way to participate. So I'm not really afraid we could be fool not to participate or to disagree with RRF. Let's start finding the way to make proposals. This is what we really need now.
If I can add one word here, if you allow me, Mr. Teloglu.
Please, please.
We have been approached by a number of municipalities that are really keen to participate, as Mr. Papasterios said, and I would agree 100% with Nikos Matzoufas that at the end of the day, it's not something that the government or anyone will force people to do. It is something that it has to be on their own, let's say, decision, their own will. Also, as part of our effort to support projects to be included in the RF, we have already said, look, we can help you even with that, let's say, part to prepare yourselves to go through, let's say, the right channels so that they are to be included. So what we experience, let's say, an eagerness to use and take advantage of this, in my opinion, unique opportunity. So at the end of the day, people that really want to benefit will benefit. It's not for everyone, if you see what I'm trying to say.
It was exactly the impression I got today from the first discussion with Vice Minister Theodoris Livanios when we start discussing about the digital proposals, about the digital strategy of each municipality. It was a really optimistic and fantastic discussion between the 16 municipalities.
I'm raising that question because I have read in the preparation for the acceptance of Greece 2.0 that there should be on implementation a lot of consulting of the local societies, trade unions, etc., etc. And the problem, one of the problems we have in accelerating and implementing these programs is how you consult these people, include them in the plan you are going to fulfill. I don't know if in Portugal there is any experience about that.
Tassos, we should not forget one point that is very important. Most of the investments, for instance, a bridge or a road, there is committed in the RRP are of course specialized very concretely. So it's not possible to build the road in another municipality, or to build the bridge in another municipality. So there is a commitment before the assessment of the RRP. So the local population, of course, agree that the investment should made in that municipality, that it's municipality. So it's not that it won't be problem for that in that point that it won't be a problem. If you are talking about other investments that implies a competitive way of view for all the municipalities, the main principle is that the municipalities that are interested come and contract with the beneficiary intermediary. The municipalities that won't enter in the game, simple, doesn't contract with the intermediary. So we have to make the rules clearly. We have to launch, of course, we have to make the public tenders and open calls according to a competitive way, and that's the market that has to function. Of course, that's the point in Portugal.
I'm talking more about structural changes in fields of activity. Let's say we have to do the decarbonization of two whole areas of the country. You cannot do that without the local population.
Yes, yeah, you
will fall on your nose if you try to do it without the local population.
Yes.
Or you have tried since 2018 in Portugal to change the forest economy and the forest protection. Can you do it without the local population? You can't do that.
No.
So if you try to implement some projects, then you may have some political difficulties in that.
Yes. Yes. In Portugal, this is a very critical point, because we have municipalities that, for instance, in the last weekend, they change the president. So it will be in some case it will be in some case difficult to get the agreement of the population without consultation. Of course, we have to consultation people, and we have to make another thing that we don't talk yet. That we have to make for some projects, and this is very important. We have to make environment impact assessment. We have to guarantee the commitment with the NSH, do no significant harm. And this is unpredictable. If you want, you can guarantee at this time that the projects, some projects that have to be submitted to environment impact assessment has a positive response from the authorities. And that's a critical point, because we have to know that some points of the game are not in our hands. And this is critical in implementing all the investments and all the reforms.
I don't know if anyone wants to add something on that.
Maybe just to add that I do think that you are raising a very important issue, and it will require probably a lot of consultation and communication also from the government to, as I said, to keep people feel involved. But it is definitely a challenge. I would say actually, looking at the Greek plan, I think many elements are positive and will positively also received. I can see some which might be less positively received by our stakeholders. So it will be a continuous work to engage with these stakeholders by the government.
So if no one has to add something, I would like to thank you very much for your participation at this session. Thank you very much and a good evening to all of you.
Good evening to all of you. Goodbye.
Thank you very much. Good evening.
Thank you. Bye.
Thank you
very much.
Okay, good evening to everyone. So it has been 4 hours of exciting discussion, and I will now try within the next very few minutes to sum up some of the points made, necessarily without making justice to all of these points. The discussion was exciting, first of all, because it involved money. And these are, as was pointed out, these are serious amounts of money. I think Declan Costello explained that the inflow of funds represents a very significant part of Greece's GDP every year. So money is always exciting. Then the discussion was exciting because it was about a plan for how the country, the Greek economy can change over the next few years. That's certainly exciting. And it's also exciting that there are open question marks, not only about the effectiveness of certain policy priorities, but also about implementation. Very briefly, and thinking about the various points, we had 4 discussions. Starting, of course, with the one between Commissioner Gentiloni and Minister Staikouras. There is a number of things that one can take from that. A deep discussion, I would say, on how Europe is now facing this crisis differently than going back to 2008 or 2010. Commissioner Gentiloni, when asked what were the main policy lessons from the current crisis, basically responded that there were 3. The need to be acting in a very fast and in a strong manner with firepower, that there has to be solidarity and coordination within the EU, and that it is very important to have a coordination between fiscal and monetary policy, despite, of course, that these come from different centers. And Minister Staikouras agreed and pointed out that key challenges ahead have to do with progressing with the banking union, the capital markets union, and policies like that. Both the commissioner and the minister pointed out that the road ahead will not be easy. We do have to turn towards fiscal discipline, for sure, they both said, but this path has to be credible. So unless the path is credible, if this fiscal consolidation path is too ambitious, then the markets would react, and the citizens, I would add, likewise. Our second panel discussion was more focused on the RRF itself, the Greek plan. As I mentioned before, Declan Costello highlighted that this is a great opportunity, and not only because the money is potentially very significant, but also because at this time there is a combination between investments and reforms. Minister Skylakakis, who opened the session, insisted on the need to use the RRF to make a more productive economy. and mentioned the fact that businesses have to become less introvert, the informal economy has to become smaller, and it is key to cover a significant part of the investment gap. Mr. Haritsis actually, first of all, saluted the EU activities this time through the RRF type plans, that this is a significant step for the EU itself. But he was more critical on two grounds. First of all, on the focus of the RRF, that in his opinion, there is insufficient focus on inequality, for example, also to support innovative startups, and so on and so forth. And he also called for a more transparent implementation during the program. Overall, one gets the impression that there is a plan. However, how things will play out over the next very few years is going to be crucial. Of course, Mr. Costello, being someone who knows Greece for years during some really difficult times, I may add that thinking about the relation between the EU and Greece now, this is actually different for sure since the one many years back. Costello himself actually said that successive governments have to be congratulated for the progress they made on certain fronts. Let me add myself the crucial point that reforms and investment, or reforms and funding, are not and should not be viewed as mutually exclusive. In fact, having some carrots and not only sticks are important for pushing the right structural changes. Session 3 was focused on a very crucial aspect of policy, which is digital. Minister Pierakakis acknowledged the RRF as a crucial funding enabler to implement the government's digital plan, and explained that the key is to simplify the procedures for how citizens interact with the state. Mr. Skordas, on behalf of the Commission, said that, of course, digital is one of the two key priorities for the European Union and within the RRF, and explained that the Commission is putting in place a system of KPIs, key performance indicators, so that they monitor each member state's digital performance and give incentives for progress. It will be interesting to see how this system works in practice. Mr. Pitsilis, on behalf of the Independent Tax Authority, this is one of the authorities where digital has been running for years, he explained. And then he said that more recently, the fact that there is this digital history that has been piling up allows the authority to proceed to further measures such as electronic invoicing and so on and so forth. Aspa Palimeri, on behalf of MasterCard, made a number of points that have to do with how electronic payments can help. I would single out two. One that has to do with the transparency that this brings to economic transaction. But she also mentioned that one can get some very valuable data. And this data can help also in policy design, so that policy design can be more focused and therefore more effective. And she described how data from various sources can be, from different sources can be combined so that one can get the picture of where we are. In the very last session of the day, the first of the 2 days we have, the focus was on implementation. And of course, we started with Nikos Matzoufas, who is heading the units that will run the RRF in Greece. He told us, of course, that this is a huge opportunity. He then quickly identified a very interesting implementation bet. Do we need to move faster or with more transparency? And he said that we need to strike the right balance between the two so that we don't have procedures that run for months and months or years and years. We cannot afford that. The overall plan has very strict deadlines. He described a number of project areas that are of interest, then interacting with Mr. Papasteriou, who represents KEVE. They described local urban development plans. Mr. Papasteriou himself, he brought in the key issue that has to do with local involvement. Actually, everyone in the panel, when the moderator of the discussion, Tassos Teloglu, actually insisted, how can we get, how crucial is the role of local involvement and acceptance of the plans at the local level? It was explained that in some sense, the plan is flexible enough that those who want to use the funds and its rules, they will, and others won't. So in some sense, this is not only a matter of decisions that have to be made at the central level, but at the very local level, decisions have to be made about who is going to join in which project and how. Two more interesting interventions in this panel. So Julia Landvai, on behalf of the European Commission Greece mission, where she's the chief, she highlighted the importance of ownership that, in her view, this time does exist, and that this is key for the effective implementation, and express some optimism. Whereas Mr. Politis, who is heading TAIPES, described the independent unit that is going to bring projects to maturity and completion. He described that from TAIPED's viewpoint, they are ready and they are now waiting for the government to decide which projects are going to be assigned. My view, as I said at the very start, is that we have the right to be excited. The money is serious, but the challenges in front of the country are equally serious. I think nobody wants to think that the Greek economy is going to miss out on this opportunity. It has the ability to use the funds to climb up and catch up with the rest of Europe and actually get on a very positive path. But there were a number of conditions, of very serious conditions, that all of our 4 panels today described. Tomorrow, the conference is going to start again at 3 o'clock, and we're going to have another 4 hours. Tomorrow is the last day. The first panel is going to set the scene, where we have Commissioner Skinas and Professor Pisaridis about how the Greek economy in general is coming out of the current crisis. And then we have some focused panels on key areas, from energy to export sectors and social inclusion. So this was it for today's day. Let me thank everyone who participated. For sure, the moderators of the discussions, Yannis Paleologos, Maria Nikoltsiou, Tassos Teloglu, And let me also stress, for those who are further interested, the website of the conference contains a number of background notes that have information and key questions for what we're discussing today. And more is going to become available after we are done with this two-day workshop. Since this is finishing the first day, we're still only halfway through, but let me thank Chris Allen and the Athens office for their collaboration. And we are finishing here. Good evening to everyone, and stay tuned tomorrow, 3 o'clock Athens for the other half. Thank you all.